Chandanam Shitalam Loke, Chandanatabi Chandramaha, Chandracha Chandanacha Sitala, Sadhu Samgadihi. Sandal is cool, moon is cooler than sandal, but the coolest of all is the gathering of the learned people. And today is one of the coolest day as all the learned people have gathered here to refresh our knowledge on the new Income Tax Act. Very good morning to one and all present here. May now request SIRC Chairman CA Subashini sir and the session speakers CA Venugopal Sanka and Advocate TNC Sridhar sir to come and occupy the dais, please. As we are celebrating ICI's 76 years of independence, integrity and excellence, let's honor its past, engage with its present and envision its future. My ICI, my pride. Let us all rise for ICI motto.
येष सुप्तेषु जाग्रति येष सुप्तेषु जाग्रति कामं 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 कामपुरुषो पुरुषो निर्मिमाणः निर्मिमाणः तदेव शुक्रं तद्ब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यति कश्चन एतद्वैता 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 एतद्वैता.
Thank you. May now request Subashini sir, Chairman SIRC of ICI, to deliver his welcome address.
Good morning. Learned speakers Venugopal Sanka from Hyderabad and Advocate TNC Sridhar from Bangalore. The other speaker who will join later, CA Subashini, and senior members of the profession, ladies and gentlemen. A very good morning to all of you. I welcome you all for this seminar on new income tax series 6. Actually, we started this last month on 18th April, the tax series 1 we started, and 5 series we have completed, and one more, the 7th one is on 30th May. CA Falgun Kumar, our past regional council chairman, is one of the speaker on the day. The other 2 speakers are there. I request all you, please kindly attend that program also and make it success. And as a SIRC chairman, we are going to have the regional conference in August, on August 7th and 8th of August at Guntur, which is my hometown. This is first time we are organizing the regional conference in Guntur. I request the team to release that video of the conference. I request you all, please kindly register yourself and make the program a successful regional conference. And today's speakers also, learned speakers are from Hyderabad, and Sridhar sir is a retired income tax official who is as a joint commissioner. He retired as a joint commissioner of income tax, and he worked in various capacities, and he's having vast knowledge in income tax. And C.A. Venugopal, senior partner in Mrs. Uma Maestro and Company, a reputed firm in our Andhra Pradesh, and he's doing now practice at Hyderabad. And I hope the members will get enriched with these two speakers. Thank you very much.
Yeah, thank you, Chairman sir. Requesting members again to register in large numbers for our 58th regional conference and do support us both in registration as well as through sponsorship. We recognize the presence of our past SIRC Chairman Bhima Bhatt sir. May now request Chairman SIRC to present a memento to both our speakers, CA Venugopal Sanka and Advocate TNC Sridhar sir. Requesting Bhima Bhatt sir also to join on the dais, please. Thank you. We are quickly moving to the first technical session. Technical session 1 on revision, appeals, penalties and prosecution. May now request the MC Smita to formally introduce our first speaker, CA Venugopal Sanka.
Thank you, sir. We now move to our first technical session. It's my privilege to introduce CA Venugopal Sanka, Chartered Accountant with over 3 decades of expertise in auditing, taxation and FEMA. He has served on several ICA committees, including expert panel reviewing the Income Tax Bill 2020-25. Today, he will speak on revision, appeals, penalties and prosecutions. Thank you, sir. Over to you, sir.
Good morning, respected Chairman of SIRC of ICI, distinguished members and my fellow Chartered Accountants. It is indeed a privilege and stand before this august gathering at SIRC of ICI, Chennai, among professionals who exemplify the highest standards of integrity in audit and taxation. Today, I have the honor of addressing a subject that is both technical and deeply relevant to our practice: revisions, appeals, penalties and prosecutions under the Income Tax Act 1961 and also comparing with the new Income Tax Act 2025. These provisions are not mere procedures, they embody the delicate balance between safeguarding taxpayer rights and enforcing the responsibilities of mandated by law. As practitioners, we are often called upon to guide clients through complex situations where these provisions intersect. A sound understanding of revisions and appeals enable us to protect taxpayer interests, while clarity on penalties and prosecutions equips us to advise with prudence and foresight. In this session, my objective is to simplify the provisions, highlight their practical implications, and share insights that will help us navigate challenges with confidence. I look forward to meaningful engagement, exchange perspectives, and collect enrichment of our understanding of this critical area of tax practice. Thank you once again, ICI, for this opportunity. Let us begin our journey into the intricacies of the Income Tax Act 1961. This is now I am starting this revision of orders under section 263 and 264. Actually, these are the only two sections very relevant, because whenever any issues comes, particularly in the case of 263, whenever the income tax scrutiny is completed under section 143(3), and they have a remedy, either to reopen the case under section 148A of the Income Tax Act, or otherwise they can do even 263 also. Whereas in the case of normal scrutiny, like 143(1) intimation or anything is there, they cannot reopen under section 263. Whereas in the case of assessment order under section 143 subclass 3, they can reopen by the Commissioner of Income Tax or Principal Commissioner of Income Tax under Section 263 of the Income Tax Act. And whereas in the case of if they want to reopen intimation, then they can only issue under Section 142(1) as a scrutiny, otherwise under Section 148A of the Income Tax Act. But whereas 263 is possible only when the assessment is completed under Section 143 subclass 3. So particularly they can reopen the assessment under Section 263 only within 2 years from the end of the relevant financial year. So these are the section is very small section. It's not a big section. It is comprising only few subclasses and classes are there. But the issue is if you go to the judicial and interpretation is huge and n number of thousands and thousands of cases are there lying in the tribunal, high court, supreme court. There are so many landmark decisions also under 263. Whereas in the case of 264, it is the appeal filed by the assessee himself. Against even under Section 143(1) you can file 264 and you can file even against 143 subclass 3 also. So both the things you can file it. But time limit is only here is not 2 years, is only time limit is only 1 year from the date of order. The date of order may be a rectification order, maybe intimation also, maybe assessment order also. Provided you should not go to the appeal. This is the crux anamata. But 264 also very a powerful tool for the assessee himself, because in 264 what happens, you can reduce the income also. Suppose you file income tax return by having say about 10 lakhs rupees. In fact, after some time you came to know your income is not 10 lakhs rupees. Actual real income is only 5 lakhs rupees. So you have remedies, only file the revised return. Suppose the revised return is there, already intimation is over, then the remedy is only 264. You can file 264 before the concerned Commissioner of Income Tax or the Principal Commissioner of Income Tax, because under 264 you can reduce the income also. But only issue is under 264 you cannot go to the appeal. Of course you can go to the High Court as a writ petition. In 263 you can go to the appeal to the tribunal. This is only I am going to sum up before starting. But all these things very important for any chartered accountant in this practice. Because mostly I can say more than 50% of, not more than 60-70 people are there. They do not know what are the issues in 263 and particularly 264. Because last 2-3 months I got almost more than 7 to 8 cases have come for filing application before the principal state under Section 264. Because they were thinking going to the appellate authorities or otherwise high courts or something. I suggested better to go for the 264 because of reduction of income is there. So this is very crucial. Actually, this is 263, 264 itself is a very complicated sections, but it is also beneficial to the assessee also himself. And 263 also based on certain parameters, predetermined criteria. Then you can go to the High Court and you can argue your case even at the time of issuing a notice by the under Section 263 by the concerned principal CIT or CIT. So now I am going to sum up. Here is Section 263 and 64 in Chapter 10 of the Act permit senior authorities to revisit actions of subordinate authorities, but they pursue different public policy objectives and contain materially different preconditions. In 263, even in the case of charitable organizations like 12A cases, also you can go to the under Section 264. Not only in the business cases and also charitable organizations also they can go. Like sometimes you get a faceless assessment order, they are making that one. Everything, suppose if you are non-filing is a small form 10B form within the prescribed time, even 1 day delay also, then automatically CPC adding the entire income as an entire turnover as an income. So they are not allowing even expenditure. You have two issues are either you can go to the rectification, again CPC, n number of rectifications, again and again same demand is coming. There also you can go to the appeal or you can go to 264 also. Easy. In the appeal what happens, again if you got favorable order from seed appeal, then they can go to the tribunal, same thing. Under again 264, so department cannot go to the higher authorities. 264 is the final. Just like how Supreme Court is final, same thing 264 order is final based on that one favorability to the SSA. And both sections as mentioned about both sections, 263 and 264 are powerful tools for tax administration to correct errors and to protect revenue. At the same time, they are controlled by statutory limitation periods. That is, I told you, there is a statutory period. 263 is around 2 years from the end of the financial year. 264 is 1 year from the date of receipt of order. And any doubts, anything is there, you please, I request you to kindly raise your questions, we'll order. IT department remedies. So I am summarizing anamata, whatever I discussed earlier. So 147 income escaping assessment, and this is the SSC remedies. The section allows the tax department to reassess income that was not reported or was underreported in the original assessment. It helps ensure all taxable income is accounted for. Under section 154, mistake correction. This is apparent mistakes, whatever happened in the order, assessment order or intimation, anything, clerical mistakes, calculation errors. Nowadays, CPC is doing so many clerical errors are there, particularly long-term capital gains, they are treating as 30%. Recently, one of the case has comes crores of rupees taxation has come, not a 1 rupee, 2 rupee, because 12.5% is special rate, they are giving opting 30%. So again, you can make it this one. If it still is going on, then you can go to the appeal. You can also file 264 also. And 263, revision by the CAT, Principal CAT, Chief Commissioner and Principal Chief Commissioner. The Commissioner of Income Tax or their higher authorities can review and revise orders if they believe the original order is erroneous or prejudicial to the revenue. So particularly these two conditions is a mandatory. Suppose it should be both the conditions to be fulfilled. One is order should be erroneous and prejudicial to the revenue also. And SSC remedies, I am only summing up so that I will go to the deep end about the provisions and intricacies and case law. And SSC remedy, we can go to the 154 mistake correction. SSC can request corrections in their assessment orders if they find. Here is 154 done by the department, there is SSC. And 246A, appeal to the Commissioner Appeals. This section allows SC to appeal against order passed by the tax authorities to the Commissioner of Income Tax Appeals, providing a chance to the contest. Whereas in the case of transfer pricing and international taxation, you can go to the appeal before the DRP, Dispute Resolution Panel. Against that, you have to go to the directly Income Tax Appellate Tribunal. You don't need to go via. Even for international taxation also, if it is final order has come, still you have an option is there either to go to the tribunal or a CAT appeals. And 264, revision by the CAT, PCAT, CCAT, PCAT. SCs can seek revision of orders by higher tax authorities if they believe the order is incorrect or unjust. And what is section 263? So clearly mentioned about, as mentioned about, this power is invoked when an order is found to be. This is a powerful order. In 263 is nothing but a powerful order. If the assessing officer has made a mistake or has not considered certain things while passing the assessment order, that is erroneous and prejudicial to the interest of the revenue. It is not or. Actually, it was typed mistake in the previous slide. This is erroneous and prejudicial. So both the conditions should be fulfilled, but then only he can issue 263. The power is vested with, Chief Commissioner, but naturally every Principal Commissioner or Commissioner only issues the 263. Before issuing 263 order, they will issue the notice and they will ask the call for the information. And then we should be in a position to counter that one. Why 263 is not applicable? Based on the facts and circumstances, the 263 will be dropped and he will issue the favorable order. Otherwise, we have to go to the directly Income Tax Appellate Tribunal against 263. And the authorities can pass any revisional order to enhance, modify or cancel the assessment and direct fresh assessment. They have a power is there. Record includes documents available during CAT, PCAT is filed. Not just those at the AO's order time. For example, valuation officer's report found later still counts. Sometimes what happens, there are certain information which is available only in the file only they will see. There are certain things even occurring after the balance sheet date, same thing. Even occurring after the assessment order also, there is a possibility is there. But exceptional cases only. So, as mentioned, twin conditions 263 will apply when both of the following conditions are satisfied. The order of the assessing officer is erroneous, refers to an objective, legal or factual error. He cannot say whatever he feels, whatever he thought, it is erroneous. He cannot say. He has to clearly mention about the legal or factual error, and error is prejudicial to the interest of the revenue. It means that gives the more income tax to the government. It is not like other cases. Requires an adverse financial consequence that results will result in loss of tax legitimate due. In 263, what happens? Whereas in the case of some limit will be there. In 263, there is no limit is there. Even for 1 lakh deviation also, you can issue 263. Even 10 lakhs, 20 lakhs, 30 lakhs. So there is no ceiling limit for reopening the case under section 263. Whereas in case of 148A, there is a limit is there. He cannot issue like less than 50 lakhs rupees, time limit is there. More than 50 lakhs, there is a time limit is there. But 263, there is no time limit. There is no, not time limit, there is no financial limit. Tax impact. Many cases have repeatedly stated that the absence of either conditions defeats jurisdiction on 263. So first we have to see, as soon as we get notice under 263, we have to be very careful whether these two conditions are exists, both the conditions, erroneous and also it results the adverse impact to the government by way of the tax. That's very important. Here is, I am going to quote about the Malabar Industrial Company versus Commission of Income Tax Kerala. I can say this is nothing but I feel like a landmark case, my initial, because whenever I am arguing 263 cases, automatically I always quote this case is there. But based on this case, because this is a Supreme Court judgment, so again there was a case in the Tribunal, High Court and Supreme Court. There are so much litigation has been, is there so much, so many years here continuing and final outcome has come. And the Honorable Supreme Court held order that merely represents an arguable or plausible view taken by the AO is not erroneous. See what happens in the assessment, while he is doing assessment, he can take his own personal view or only which is the view is available to them, judicial view he can take. Subsequently, while reopening under section 263, the commissioner cannot say the view taken by the assessing officer is wrong. So based on the circumstances of the case, it differs from the assessing officer and commissioner also, but view taken by the deputy commissioner based on certain predetermined criteria, based on information, based on his verification, he cannot say it's wrong. So that's why they use the word plausible view taken by the AO is not erroneous within the meaning of 263. If the AO has applied his mind and taken a possible view supported by materials on record and law, the commissioner must not substitute his own view merely because he disagrees. Conversely, if the AO has failed to make any inquiry on relevant material or has ignored binding law resulting in loss of revenue, such failure has been held to constitute an erroneous order prejudicial to revenue and within the scope of section 263. Same thing happened to one of my client companies, one of the biggest companies in Hyderabad. I argued before the income tax tribunal. So based on the, even I quoted this case and we analyzed this case. So I also implemented same thing, whatever they have done in my case also. In income tax tribunal favorably considered and they have squashed the 263 order in two assessment years in less than 6 months time. In 6 months back. So this is very, very important. I request all of you to go through this case also in detail. I am also giving the case laws. I will ask Srinivas to circulate all the people. So this is very, very important for any beginners or any even practitioners also. This is very important. This is the fundamentals explained by the Supreme Court. And explanation 2 of the section clarifies this. We are talking about what is erroneous. So erroneous is a general word. So then better to have it clarification in the section. Lack of inquiry or verification. The order was passed without making inquiries or verification that should have been made. Relief without inquiry. The order allowed a relief for a claim without proper inquiry into the claim. Suppose some people must have claimed section 10A and section 10B or some not 10B, 10A is there, old 10AA is there, and again 80G will be there, 80GGA will be there, 80JJAA is there. So against both instructions, the order was not made in accordance with any order, direction or instruction from the CBDT under section 119 against judicial precedent. The order is contrary to any decision which is prejudicial to the SSA rendered by the jurisdictional High Court or the Supreme Court. So this is very, very important. What is erroneous? And revision order, the limit of revision order. The revision order cannot be made after the expiry of 2 years from the end of the financial year in which the order sought to be revised was passed. So particularly this is very, very important. Here is the date is not the date of issue of order. It is the date of receipt of order by the SSC. Suppose the order has come on 31st March exactly. So it means 31st March 2026. So he has time up to 2 years. It means before 2028 they have a time to issue the 263 order. So he cannot issue based on the delivery of the order. So if it is there, then this is very important matter. Exception, notwithstanding anything contained in section so and so, order and revision order on this section may be passed at any time in the case of an order which has been passed by the consequence of or give effect. What happens sometimes, there is a direction from the appellate tribunal, there is a direction from the High Court, there is direction from Supreme Court for stay the proceedings. That period has to be excluded under section 129. The time taken in giving an opportunity to the SSC to be reheard under the provision of the section 129. In the case of stay proceedings only, an opportunity of being heard must be given to the SSA. While issuing 263, 100% they have to give opportunity to the SSC. It is not only binding the income tax but also binding the Constitution of India. Article 14 is very, very clear. Orders under 263 can be appealed at ITAT. You have a time up to 60 days time from the date of receipt of order of the 263 order. So CAT, PCAT cannot revise matters already decided in appeals but can revise the other parts of the same order. So whatever the order is already, suppose the client has gone to the appeal and already decided in the cases, then he cannot issue same issues. If 263 is there, other issues which is not covered by the assessing officer during scrutiny proceedings, he can issue, but not the same issue. That is very, very important. Some people against 143.3, they must have gone to the appeal and it was settled case is there. Again to under 263, he cannot reopen under the same grounds of appeal. There are so many hundreds of cases it is open, but again it was quashed in the income tax appellate tribunal. And the procedure for an SSC responding to the notice under 263, what I mentioned about clearly. So first of all, immediately review the notice and assessment file is very important, because that is the reason in olden days we used to give information during physically. Nowadays everyone is going through online portal. It is a recorded is there, everything. First you have to see under 263, what is the notice, what is the contents of the notice, what the issues are observed by the income tax commissioner for reopening of the case. Based on the reopening, then you have to go through in depth the file. What is the questionnaire issued by the assessing officer while seeking information from the SSA under section 142 subclass 1, and also see the section 143T. If you see some 3-4 years back, under section 143 subclass 2, they used to give reasons for opening the income tax scrutiny. Nowadays, we are not getting any reasons for selection of scrutiny under 143.2. I think some people must be knowing. And for that case, as soon as that comes 143.2, immediately you file a response by filing income tax return acknowledgement, computation or basic documents, and you also seek what is the reason for selection of scrutiny. That is very, very, very fundamental important. Whereas in the case of limited scrutiny, whatever the limited scrutiny is there, the same points should be considered while issuing 263. If the limited scrutiny is talking about section 14A disallowance, only limited, or 80G donation to political contribution is 80GGA, that only issue only considered on 263. Other issues not pertaining to the limited scrutiny points, he cannot issue under section 263. He doesn't have a ground to reopen the case under section 263. Whereas in this, that is why this is very important. Suppose in the income tax scrutiny, whatever the points are there, we have to find out whether limited scrutiny or in olden days they used to give limited scrutiny or complete scrutiny. Now we are not getting any such type of notices from the department. It's selected for scrutiny, this one, that one. So better to ask the SSA so that you should be knowing all this. Whether they give the reasons are not immaterial, but we have to ask. So see the entire file of the income tax case, and then what is the reason, what is the question is given, what is the reply provided by the SSA to the assessing officer during scrutiny proceedings. So how much depth is there? Suppose if it is depth, the issue is already covered by the assessing officer while scrutinizing that one, it is immaterial whether it is captured in the assessment order or not. Suppose if the 14A issue is selected and he has raised the question and we replied that one, it is enough. It is not the duty of the SSE to see that it captures in the assessment order. The capturing the assessment order is not the duty of the SSE, it is the duty of the assessing officer. It is not our document, it is their document. Suppose not capturing doesn't mean that he has missed or he has not, it is erroneous or prejudicial to the revenue. So very, very clear case, there are landmark cases are there. If the issue is already considered, it doesn't mean he has not mentioned anything about the assessment order. It doesn't mean that he has not gone through. So it is not erroneous. Very important. So gather supporting documents and material that you ever considered. If you ever applied mind and recorded reasons, demonstrate that a plausible view was taken, reply in writing addressing legal and factual allegations, point to binding precedents, plausible views and documentary evidence, attend the hearing either through counsel or authorized representative, and present the case concisely before the revisional authority. If an adverse revisional order is passed, prefer an appeal to the ITAT, and then to avoid, get a request for stay and interim relief wherever available to avoid recovery while appeal is pending. Where the SA has strong grounds to establish failure of natural justice or jurisdictional excess, writ jurisdiction of the High Court may be invoked. Sometimes what happened, they are not given the reasonable opportunity as per the law, including Constitution of India. You can go to the writ directly before the High Court. Even last year I have gone 2 cases directly High Court. Immediately in first hearing itself, it is accepted and they have issued the notice for hearing. In the first hearing itself, they have issued the stay. Because this is a gross negligence. When there is a gross negligence, automatically you have every right as per the Constitution of India, linking with the Income Tax Act. And this is a fresh revision on 263. So generally there is a flow chart issued by the Income Tax Department while the transaction provisions are going on from Income Tax Act 1961 to Income Tax Act 2025. Here is what happened, particularly in 263 and 264, the provisions are same. There is not at all a difference is there. All same. What is the intention of 263, 264? Same thing happened even in the Income Tax Act 2024. Particularly these 2 things, erroneous and prejudicial to the revenue, same thing continued. Same period 2 years and 1 year is also continued. While the purpose of the Income Tax Act is what happens, there is nearly hundreds and thousands of amendments have been done, and so many times finance bills are there. So for every amendment or anything, they have to keep the document. Suppose if the Parliament asked, I'd like to know what is the amendment has been done in 1956, they should have to give the original amendment also. Original provision, what is the intention for every amendment or every provisions in the finance bill. It's not only supported by the text of the provisions, it is also supported by the intention of the legislature. That is the reason sometimes they are passing in the finance bill, amending finance bill, making this retrospective from 1961. Whereas in the recent budget in February 2026, there are certain amendments have been done. They have given clarification in the finance bill. They are mentioning about intention of the legislature is retrospective from 1960 to 1960. So this is the point. Next time onwards, any bill is there, anything is there, they will give only from 2026. So they avoid this carrying the hundreds of amendments, all these things keeping. And also what happened, there is almost more than 60 to 65 years, 70 years is dispute is going on for so many cases are there. So they wanted to avoid all this litigation. They wanted to simplify the English language or text of the provisions in income tax. They made the Income Tax Act 2025. For us, there is no difference at all from 263, 264, whatever the case laws that are applicable for 263, 264 for Income Tax Act 1961. Same case law, same things applicable for the new Income Tax Act. This was also captured in the new Income Tax Act. And same notification, same CBT circular also is there. So this is a capturing of the, you have the thing is there. Whether you can file, suppose you issued the order on 31st March 2026, while you are filing appeal, you use the new, whatever the form that is available for 1961 applicable, same form it is applicable. Because the subject is before March 2026, Income Tax Act 1961. Same provisions are applicable for filing appeal. and the limitation period for revision under section 263. A new section is section 377 of ITA 2025. And no substantive changes are made in the outer limitation period under both section 263 of the Income Tax Act and 377(4) of Income Tax Act. Revision must be exercised within 2 years from the end of the financial year in which the order sought to be revised was passed. However, the Income Tax Act 2025 refines and clarifies computation mechanism. While Income Tax Act provided for exclusion of time during stay proceedings or rehearing through an explanation, the Income Tax Act 2025 expressly enumerates the periods to be excluded, such as time consumed in rehearing and period during which proceedings are stayed. Earlier, even Income Tax Act also is there, but in 2025 clearly mentioned about it. This period has to be excluded while calculating 2 years period time whenever there is a stay proceedings. All most importantly, section 377 subclass 7 introduces an explicit 60-day minimum residual period rule, providing that if after excluding the relevant periods, the remaining time available for passing the revision order is less than 60 days, it shall be automatically stand action 60 days. Very, very crystal clear. Income tax provisions are very crystal and clear. New Income Tax Act. Earlier is there are so many sections, subsections, subclasses, explanations, and again one section is contradictory with another section, and one section is dominated the other section. One section overrides the another section is there. So all these things they removed mostly, but we have to see for the next few years what's going on, how litigation comes or something is there. 1 second. And this is a very, very important tool for all the SSCs. 264 is excellent. This is the only excellent. 264 allows the CIT to call and examine records of any proceedings in which order other than referred to section 2 has been passed by the AO. Who can initiate the revision? Even a commissioner can initiate under section 264 on his own. Whereas 263, he cannot reduce the income. In 264, he can reduce the income. On own motion, CIT can decide to review an order independently without an application from the taxpayer. And on application by the SSC can apply for a revision of an order they believe is a correct order which is prejudicial to the interest of the SSC cannot be passed. Here is, they mention about 263 prejudicial to the interest of the revenue. Here is, it doesn't mean that prejudicial to the interest of the SSC. And time limit, as mentioned about, this commission cannot initiate a revision of an order if more than 1 year has passed since the date of passing of order by the AO. Since 1 year limit from the order date. Whereas in the case of SC's application, the SSC has to make an application within 1 year from the date on which the order in question was communicated to him or the date on which he otherwise came to know of it, whichever is earlier. However, the commission can accept a late application like condonation also. You can make a petition before under 264 after 1 year, 2 years, 3 years also. But provided it is his judgmental decision whether to accept or not to accept based on some sufficient cause for the delay. Even if it is sufficient cause is there, if this is not accepted, then again you cannot go to the High Court, the tribunal or anything, but you can go to the High Court. Under writ jurisdiction you can make. Provided this is based on sufficient reasons are there, the commissioner is not accepted, you can go. And the High Court will give direction to the commissioner to accept this one. There are n number of cases are there like this. If the SSC applies, the revisional order must be passed within 1 year. Again, the SSC applies, the revisional order must be passed within 1 year from the end of the financial year when the application was there. There, application within 1 year from the date of receipt of order, but passing order within 1 year from the end of the financial year. 263 is within 2 years from the end of the financial. For department purposes, always mentioned about within 1 year from the end of the financial year. For the SSC is only within 1 year from the end of, not end of the financial year, from the date of receipt of order. Because these sections are drafted by the department. I don't want you to consider joint commissioners, sir. So every language, everything, if you go through in depth, always this favorable to the revenue only. Because they want to collect more revenue for spending public expenditure. So this I mentioned about very clearly. Exclusion for stay. Any stay petitions by the higher authorities, then you have to exclude that time limit. Other points to be borne in mind. Once an appeal is filed against an AO, it cannot be revised by the CIT or principal CIT under Section 264, even if appeal is on different grounds. Once an appeal is filed, like against 143(3), you have already filed an appeal, and then you cannot file under Section 264. Is there? That's very, very clear. Otherwise, you have to withdraw. Otherwise, you file 264, you withdraw the 143 appeal, then only is possible. So that 30 days time period has to be lapsed. After completion of 30 days period only, you can file 31st day you can file 264. No appeal can be filed against an order under Section 264, clearly. Only under writ jurisdiction, High Court only you can do. SSA cannot seek revision under 264 in the following. So whatever we want SSA cannot seek whatever he likes or whatever he wants. It is not open to the SSA. But there are certain restrictions and criteria is there. First condition is appeal cannot be filed. Appeal is not filed. And another point, when the order is already being contested in appeal before the Commission appeals, when an appeal against the order can still be filed with the Commission appeals, means 30 period has to be lapsed. When the order has already been part of an appeal to the Commission appeals or the appellate tribunal, every application for revision submitted by a taxpayer must be accompanied by a standard fee of 500 rupees. This appeal fee. An order can be revised any number of times. Here issue is very, very unique nature. In any number of times you can file 263, 264. Suppose if the principal commissioner has raised some issue, say about the SSE has unexplained income, unexplained expenditure, which was covered in the during scrutiny proceedings, but was not covered properly by the assessing officer, he can issue. And there is another issue called like donation to political contribution. So he has not covered. After passing 263, once again he can issue another 263 order. So here is the nature of transaction and grounds. Again 264, we filed. Once again we wanted to think something, we missed out based on certain parameters, but you can. But 99.99% generally 1263, 1264. Nobody files a number of times, but section allows. I'll tell you one, I'll ask one small question. One of the live example has, I handled recently. For one case is there, say about 5 years back, one of the SSE having income, he is a high net worth individual. He is also managing director of one of the reputed private limited company, and he has taken the director's remuneration. As per the board resolution, they have accounted nearly 3 crores rupees salary, because as a director, he is deemed as an employee. It has to be done Form 16. He is a full time, but he has not taken any money. But in the board meeting, they have taken a decision, and they passed entry in the end of March 2026. And subsequently, by 31st May, he filed the ETDS returns also by considering the TDS. But subsequent to that one, there was a major blow has been happened in the company, for which it is very, very it has become huge impact to the company. So subsequently, the company doesn't have any money to pay the salary to the managing director. And for that managing director, he doesn't have any business income. He filed the income tax return before the due date, like 31st July. Because as if he is thinking, we will get the salary. And subsequently also, he is waiting for some time. And revised return due date, because that time the revised return due date was 31st December. Now the revised return due date is extended, belated return extended 31st March. So you can't file revised return now. And intimation also has come. And everybody is telling you have to go to the. I request, what is the remedy for this SSC? Whether to go to the appeal, or whether to file 154, or filing in any other section is there. What is the remedy, sir? See, in this case, the intimation also has come. When there is a demand is there is no demand actually, because whatever the TDS is there, he declared there is no demand, partial amount like few thousand rupees like interest income, he paid the self-assessment tax and filed the return. So intimation also comes fast, because when there is a refund is there, they will held back. Generally, they will hold refund based on their parameters, even though they never mention, they don't hold. But hundreds and thousands of cases, crores of rupees is there, they are holding. So in this case, very fast it has come. by I think maybe in the month of September, October it has come. So because he's my client, even company is also my client. When we are doing audit for the March 2026, whatever year is there, we were not doing because the past entry, why should I worry about this one? Next year, when I am filing their income tax return, then shocking anmata for me. MD told Venu, I have not taken any money is there. So issue is very, very typical position, doesn't have any money to make the payment because of the huge setback, not because of national, because of international issue. International issue has come, some other issue, some complication has come, he has not paid. Then immediately I told, only two things are there. You have to file rectification petition. I don't think rectification petition you will consider. Because there is not an apparent error. It is not a mistake. Form 16 is there, he declared. It doesn't mean. Then I told you, salary case always based on the receipt. It is not on accrual basis. Forget about you are a director or anything. If you are an employee, if the salary is not received, even though it is there, it is not taxable. Fundamentally, for the salary case, recipient at the time of receipt is taxable, not at the time of even accrual is there. Once receipt is very important. If you have not received, suppose you accounted on March, you received in April, no need to worry. You have not received any money is there. It is only book entry. Then immediately I told, you pass another board resolution or AGM meeting, general body meeting, you make it, you reverse that entry in the books. Whatever is there, I am not worrying, TDS or anything. Then I will make a petition under section 264 because we have a time of 1 year from the date of receipt of intimation. Then we file the 264. And then because reduction of income. Otherwise, reduce income to the extent of your TDS amount. Because TDS already created around nearly for 3 crores rupees, 1 crore is there almost. You offer 1 crore rupees. Whatever you got TDS, you offer and get the refund. Because TDS credit is there. Department will not accept. The entire 3 crores is not taxable. You got a 1 crore already is there. TDS credit is there. You reduce your salary from 3 crores, 2 crores because of the financial situation. You have not received the money. You received only 1 crore. So we offered only 1 crore. And then we filed the revised return. Not revised under revision provision 264. This is the one. And subsequently, they accepted all parameters, documents, everything. This is a real, genuine reason only. It is not like intention is not to evade, intention is not to cheat. The real, genuine reason and 264, based on all these things, 264 is passed. And SSG got refund, that is a different case. Because of, we offered entire, whatever TDS credit is there. Issue is he has not received 1 rupee. Even next year also not received because he is building the company. Financial difficulty is there. Only that section is only in the law is available. There is no section in this. Particularly, it all depends on case to case. But this case, this is the only provision. There may be some other provision, but this is a very easy provision. Maybe. Suppose if it is selected for scrutiny, then you can argue. In the case of income tax scrutiny was selected, you can argue. You can reduce your income. You can make a fresh ground. No issue. You can reduce all these things. The assessing officer may accept, may not accept. After that, you can go, when you are going to higher authorities, then you can order. Argument is there. But whereas in the case of intimation, not possible. 154, not at all possible for filing. So this is only my personal view and my personal case. So each and every case is different from each and every assessing officer also, and each and every principal CAT, he will take on his own view on matter. So courts have emphasized that section 264 cannot be used to reopen matters where the other efficacious remedies like appeal are available and that the authority must honor limitation and pendency bars. And the difference, CAT appeals and revision. Time limit 30 days from the date of receipt of orders sought to be appealed against. 1 year from the date of receipt of orders sought to be revised. Appeal to higher authorities is possible. No further appeal is possible. Appeal fees 252,500 rupees irrespective of amount assessed income. And comparison provisions of Income Tax Act 1961-2025. See 263, 264, 377, 378. Same thing. Revision prejudicial to revenue. Revision prejudicial revenue. Revision of other orders. Actually, for 263 talks about revision. 264 talks about revision of other orders. The verbatim text they mention like this, revision of other orders. Here is principal commissioner, commissioner. Their principal commissioner, commissioner of designation continues unchanged. Again, supervisory corrective jurisdiction order must be erroneous and prejudicial. Same erroneous plus prejudicial. 264. Beneficial revision and assist application. Here also beneficial revision, separate provision for other orders, not a substitute for revenue revision. Here is not a substitute for revenue revision. There is a little is there. Beneficial revision, separate provision for other orders, not a substitute for revenue provision. 2 years from the end of the financial year, same thing. 1 year, nothing is. And 260 appeal to ITAT, appeal to ITAT. Order section 377. 264, no further appeal, writ before High Court. Writ jurisdiction, same. I told you very clearly, if you are not happy with 264, you can go to the High Court based on certain legality, not based on the facts of the case. And judicial proceedings. As mentioned about earlier, the Malabar company, I request all of you to go through as a professional. Whenever you have Sunday or Saturday is there, you spend much time on this case. Those who wants to know about 260, 263, this is very important. Fundamentally, they explain each and every case and matter, because you will have an opportunity going through the High Court and also Supreme Court is there. The way they represented, the way the intention of the legislature, everything. Because in India, these are the only two courts like High Court and Supreme Court, they have a jurisdiction to interpret the statutes of the law. So this decision has been foundation in drawing line between difference of opinion and an order that is actually erroneous and prejudicial. It remains a touchstone for courts and tribunals when testing the validity of section 263 orders. So even I have taken a help of this case and argued whenever this is a fundamental point, we always take it like this. Even ITAT cannot say anything no based on this one. Since Supreme Court's decisions since Malabar have at times clarified nuances, notably the requirement of reasoned order, and that where the AO has undertaken a proper inquiry and recorded plausible view, Commission should not interfere. Subsequent authorities have also restricted routine remands and emphasized that the Commissioner should act on merits rather than simplifying remanding the matter unless there is a demonstrable failure inquiry. In one of my case in recent tribunal, in section 14A, they have issued a detailed notice. They have issued some notice, scrutiny points 142.1. We submitted the information under section 14A. He has not asked any further information, and then he has not mentioned anything in the assessment order also. He gave an income return is accepted without anything. After 1 year, under 263 principal CIT reopened the case under section 263. Then we gave the same information with case laws professionally drafted, everything. I thought 100% I'm going to win and 263 will be dropped. But CIT has not accepted our version. Whatever my reply, he condensed in 3 lines, and then they passed the order. Then I went to tribunal. So in one hearing is there. In one hearing itself, I mentioned about, they have raised the query, I have given the reply. It is the prerogative of the assessing officer. It is the document is, owner of the document is the only assessing officer. It is not SSC. Who am I to dictate as assessing officer to for the purpose of appellate authority or higher authorities? So they are asked, are you sure? I want a certificate, certified copy. Then I mentioned about, then next time I carried the laptop, and then we have taken the printouts from the portal itself. Luckily, it is a faceless. Portal is there. What is the question? What is the everything? And then I showed my laptop. See, these are the things you can. If you want, you can also. He has taken my laptop. Generally, has seen the same day he quashed the 263 order. Of course, all these case laws, all these things is there because he considered the view. He may not is there, but he has issued notice on 14A, and then he asked, we given the detailed reply. Sometimes what happens, so many cases, he is not mentioning in the assessment order. It doesn't mean that he is there. He has taken a view already. He cannot say he has not done anything. And CIT versus Amitabh Bachchan, in 2003, case is there, summarizing, regarding applicability of 263, which has to be seen is that satisfaction that an order passed by the authority under the Act is erroneous and prejudicial to the interest of revenue is the basic precondition for exercise of jurisdiction under section 263. Both are twin conditions that have to be co-jointly present, permitting exercise of revisional power in a situation where two views possible would really amount to conferring some kind of an appellate power in the revisional authority. This is a course of action that must be desisted from. So this is also Bombay High Court decision is there. They also relied on the Supreme Court case. Simple. So because this 147 issue, again, revised as order section 263, because even after 148A, 147 read with 148A also, under 263 they can reopen. They have time up to. But here is very important is whatever the issues taken in 143.3, after some time 148A and again 147 read with 148 passed order, then the CIT doesn't have any power right to make the issues that is happened in 143.3. He can only 263 is only talks about 147 read with 148 only. Suppose if it is within the period of 2 years is okay, but not that one. Suppose in 143.2 subclass 2, there are some 5-6 issues are there. Whereas in the case of 148A, there are some other issues have come. While issuing 263, in response to 147 read with 148, he cannot issue 263 based on the issues that was raised, discussed in the 143 subclass 3. So that is very, very important. Under section 263 subclass 2 of the Income Tax Act 1961. So that is very important, because I wanted to mention this is very, very crucial point, because there are so many CITs, they are issuing, while issuing 263 in response to 147 read with 148, they are also considering the issues that were raised in original scrutiny proceeding. They cannot do. Principal CIT versus Chandigarh, this is a special petition. An authoritative pronouncement emphasizes that the Commissioner cannot routinely remand an assessment back to the AO when the AO had inquired and reached a view where the AO's investigation is not shown to be an abject failure. The revisional authority should decide on merits and not issue a naked remand. The judgment is particularly important in current practice and constrained mechanical remand. This has come in 2025, less than 1 year case. Because this is an advantage when we are referring the latest case, they are considering not only based on the original fundamental of the Malabar case Supreme Court, but also over the period of 20 years, 25 years, they have captured all these things and they have interpreted. You know that High Court and Supreme Court is the only courts in the earth, in this country, for interpretation of the statutes. And another one, because why I am capturing more in the case law, this is more practically is possible for all is the practitioners are very, very relevant, because the way interpretation of statutes in the section of the provisions are different. When we are reading the judgments are different, because as a chartered accountant, generally we are more on the facts of the case. But whereas in the case of courts, they are more not only on the facts of the case, but also more relevant on the legality and the interpretation and intention of the legislature. Suppose if we ask intention of the legislature, nobody talks. When the High Court and Supreme Court asked the department what is the intention of the legislature, they will submit everything, just like us. For High Court and Supreme Court, there is no differentiation between the Income Tax Department and CS. Both are equal. This is very, very, I have seen personally when I am studying the law course. When we are appearing as a practice in the training in the High Court, same thing. The Advocate General or Attorney General is representing, Advocate is representing. For them, is both are equal. There is no disparity. Only disparity is the appeals and 263 is only disparity, but otherwise Income Tax Tribunal, High Court, Supreme Court, there is no disparity. Both are equal. Only facts of the case and legality is important. The Honorable High Court in the case of CIT versus Reliance Communication 2017, the assessing officer did not make any reference to these 3 issues in the assessment order, cannot make the erroneous when the issues were indeed looked into. The mere fact that the assessing officer did not make any reference to these 3 issues in the assessment order cannot make the order erroneous when the issues were indeed looked into. As mentioned about earlier, even I argued some cases. He has given a question, I gave the reply. It seems to be he accepted. It doesn't mean that there is an issue is there, and he has not captured anything in the assessment. Nowadays, you see any facial assessment order, they are not giving any speaking order sometimes. They give only income return accepted sometimes. We do not know what is the reason for selection of scrutiny. Even we made a request, we are seeking a specific letter for giving the reason for selection of scrutiny, they are not giving. Some people they are giving. It is not mean everybody. Some people they are issuing, some people are not issuing. Only this is the main reason. When it comes on 263, we can argue. It comes on 148A also, we can argue that one. Same issue cannot do, even 148 also. The Allahabad High Court in the case of CIT versus Krishna Capbox Private Limited, here is, it held that once the inquiry was made, a mere discussion or non-mention thereof in the assessment order cannot lead to assumption that the assessing officer did not apply his mind or that he has not made inquiry on the subject, and this would not justify interference by the commission by issuing notice under 263 of the Act. Whatever I am capturing all these things, recently I handled some cases, so which is relevant and more relevant for the practitioners only considered this one. So the Allahabad High Court 2015 also very clear, very clear while issuing the 263. And the rectification of mistakes under section 154 scope. This is also a beautiful section actually. Most of the people, more than 90 to 100% of chartered account, they use always 154 when there is a mistake calculation in the capital gains, because CPC calculates differently. We do not know how it calculates. So always there is a possibility is there. Again you have to reapply that one. 154 of the income tax allows income tax authority to rectify mistakes apparent. Rectification is not a second assessment. It is a statutory right to rectify errors that are self-evident from the record. So here is the meaning of what is the mistake apparent from record. There is a Supreme Court decision is there. T.S. Balaram versus Wolcott Brothers is there. Must be an obvious and apparent mistake, not one established by long drawn reasoning. Error must be self-evident, non-debatable and discoverable from the record themselves. Includes clicker errors, arithmetic mistakes can clear. Whatever capturing, I am also capturing data from the judicial pronouncements. Orders that can be rectified. So any order passed under the Income Tax Act you can rectify, like 143 or 147 read with 148 also. If there is a mistake, apparent even 263 also you can make, even under 264 also you can make. Even in the case of appellate authority also you can make, and if there is an apparent mistake you can make a petition also. Miscellaneous petition you can make the payment. Within 6 months from the end of from the date of receipt of order you can make a petition. And intimation 200, intimation under section 200A, T-days returns processing. Intimation 206 CBTCS. So we are making so many rectifications, I know. Who can initiate rectification? The authority may rectify on its own motion, or SSC can make a motion. Where the authority is yet appeal, the assessing officer can also request rectification is there. Because see what happens, sometimes typographical errors, calculation mistake, very common. So this is a powerful tool for even SSC or assessing officer. Sorry, madam. Appeal once. Suppose if the time frame is there within 1 year from the date of receipt of assessment order, or from the date of receipt of intimation, or from the date of receipt of rectification order, still you can go for 264. Yeah. Suppose you file 143.1, you file rectification order, rejected, immediately file within 1 year. Within 1 year from the date of receipt of rectification order, you can go to 64. Time limit is only 1 year from the date of receipt of order. 154 is also deemed as an order only. 1 year from the date of 154 is 4 years is there. From the date of, you can file 154 or 154, time limit is 4 years from the date of receipt of intimation, or within 4 years from the date of receipt of order also. For him also same thing. He can. 154 is only 4 years. No. From the date of receipt of order. From the date of receipt of intimation, from the date of receipt of order, 4 years limit. Under section 154. He has to pass, because in rectification order, suppose we made a petition is there. Suppose you say about 2022, assuming 2022, March 2022, intimation received in the month of August 2022 for a salary case. Suppose if there a mistake is there, still we have a time to file rectification petition before the jurisdictional level or otherwise CPC. That application time limit is within 4 years from the date of receipt of that one. So after that, the department will take whether to accept or reject. Suppose if they rejected, still you have a time to go to the seat appeals. And if you don't want to go that one, if it is a mistake apparent clearly, you can go file the 264. Yeah. There is a official order has to come. No, there is not limit of within 4 years. It is a rectification petition you have to file within 4 years from the date of receipt of order. Officer also time limit, but they are not following. You have to ask and then you have to request them to cancel or reject because they have generally time is there. See, for any assessing officer, they have the CBT instruction as there. They have to dispose like 143(1) intimation. Same thing. They have a limit is there. Time is there. You made the CP grams. You raise the CP grams compulsory. CP grams. You file a grievance before the CP grams. Immediately it will come because it will be monitored by the CBDT chairman and finance ministry. And PM office will monitor. Put the CP grams for non-filing of non-disposing case 154. It is a clear classic example. Your case is a classic example. You can file CP grams. Vivas also I filed 154 also. I got rectification order also. Sir, after digitalization, this is very common. Very common. Out of 90% of the cases, unless and until we follow up personally, the people are not disposing. They are not bothering at all. They will only see the faceless anmata. This is the main issue. This is a practical.
In case there is no order has been passed, what is the remedy for?
If no order is there, you have every right to go for the higher authorities like additional commissioner or commissioner, and also you can also parallelly you can make a grievance through income tax portal. You can also put a grievance petition through CPE grams, which is monitored by the PM office.
Okay, no intimation has been passed, no order has been passed.
Yes, sir, they have to pass, sir, compulsory.
Okay.
There is a time limit is there for them internally, but it is not binding on us, it is binding on them.
Okay. Thank you, sir.
The 4-year period runs from the end of the financial year in which intimation was sent. 143(1) must be made within 4 years from the end of the financial year in which the order sought to be amended was passed. Within 4 years from the end of the financial year. No. Next one is procedure. And procedure, this is where rectification application is made by the SI and is not disposed of within 6 months, it is deemed to have been allowed.
Venugopal,
But that is not doing that one.
in that case where the officer is not passing the order, there is one more option available to file a writ of mandamus.
That is always there. Writ of mandamus, I told you earlier also. So writ is 226 because what happens, Article 14, Constitution of India, because after my reading in the LLB course, then I came to know all this is all lower level authorities, including income tax, everything. This is off the line. Because he retired, I can talk whatever I want. Issue is only High Court and Supreme Court is having 100% jurisdiction. If it is against Constitution of India, reasonable opportunity not given, and reasonable opportunity not given, and relief has not been given, it is a gross negligence by the officer for not disposing the number of years and number of times. Then every right, you go there automatically, they will give you. They will instruct the AO to pass, otherwise they will living penalty. Recently, one of the high courts is living 50 lakhs, 1 crore also penalty. 50 lakhs I have seen one case for gross negligence, Bombay. Gross negligence. Taking the advocate in one first hearing itself is once it is listed, if you are prepared with everything, for the income tax department, you have to spend lot of time. Hours together, years together, months together for preparing. For High Court, only legality, similar cases, in the High Court or Supreme Court, something, in less than 10 minutes, 15 minutes, you will get a relief, they will issue stay. Otherwise, they will direct the assessing officer to follow. If they are not following, contempt of court. Out, CBDT chairman has to come and stand before them. They will ask. For them, assessing officer, who is assessing officer? Who is the deputy commissioner? They don't bother about. They only bother about who is the finance ministry secretary or CBDT chairman. This is what some of the courts are making. It is not 100%. I am talking about my personal view. So immediately go that one. Automatically you will get relief. Whatever you spend time, hundreds of days or something, you will have to spend only 1 day with advocate. That is enough. This is a practical relief. And key judicial pronouncements under IT Act, principles under IT Act 1961, 2025. Both the things are applicable. It's a typing mistake. T.S. Balram, I discussed. A mistake apparent from record must be obvious, patent, and not one requiring long-drawn reasoning to establish. Honda Seal Power Company, Power Products versus CAT. Supreme Court. If prejudice had resulted to the party which prejudice is attributable to the tribunal's mistake, error or omission, and which error is a manifest error, then the tribunal would be justified in rectifying the mistake which had been done in the present case. Even I also handled one case. Within 6 months, we made a miscellaneous application. Based on that one, immediately they rectified. Even tribunal also, they're all human beings. The tribunal is handled by the humans only. So naturally, they also made a mistake. They themselves, they recall the order, they modify. Otherwise, if we make a petition, miscellaneous petition, automatically they can do it. CAT versus Eurocycles. Supreme Court decision 1997. Rectification under section 154 can only be made when clearing mistake of fact or law has been committed by the officer. Passing the order becomes apparent from the record. Rectification is not possible if the question is debatable. Here, if you see any litigation comes, so I can say out of 100 litigations, 50% of the litigation is mistake apparent on record, particularly with the CPC or JO. So 50% of the litigations comes only small things. For that, even I have, when there is no response 2-3 times, then I went to appeal. Appeal we got favorable. Again, they are not passing order. Again, we approach JU and then they pass order. Because the SC doesn't have money or time to go to the High Court for small petty issues. But more than 50%, this is not given by me, this is given by some of the officers. If the officers are correct or they are working perfectly, then automatically 50% of litigation will go away. Under section 154 or under section some other 264 or anything. And changes under IT Act, section renumbered from 154 to 357, 358. In 263, 154, sorry, that is 260, this is 154 to 357. Core principle of rectifying mistakes apparent from record reckoned without any change. Scope of rectifiable order, procedural moderation, time limit 4 years from the end of the financially retained, computation mechanism refined with clear exclusion provisions. Practical considerations. Rectification is the simplest and quickest remedy available to an assessee for correcting errors. Earlier, when there was a physical assessment, physical intimation is there, horrible, sir. After digitalization, we are all fortunate, all chartered accountants are fortunate. Mostly when we are filing rectifications under CPC, automatically coming. But still, litigation is there, that is a different case. But mostly compared to the earlier, there is a sea change is there after automating the system. So mostly rectifications are coming fast, but some rectifications still going on, some problems are there. And always ensure mistake qualifies as apparent from record before filing. Debatable issues should be pursued through appeal. When there is a dispute is there, when there is a debatable issue is there, then you have to do. Even debatable issues, they cannot consider an intimation also. Or 154, even a single officer cannot do 154. And this is the one, actually 263, 264, because I covered 263, 264. This is only 2 sections, very complicated and very litigated also. So that's why I have taken more time to explain 263, 264. It is a powerful tool. 264 is a powerful tool by the Income Tax Department. 264 is a powerful tool using by the SSC. So we have to balance both 263, 264 so that it will be beneficial to the SSC. And I am reading this, 1 second. Appeals and adjudication. See, these are all what happens, 264. Appeals is also part of matter. Appeals and revision. Appeals and revisions from the backbone of India's income tax dispute. For anything in India, Constitution has made done. Nobody in the country, no person in the country will have a full sovereign right, sovereign power matter. So, for every action, there should be compensated by the judicial system. So, no officer should have a 100% power or right. So, for everything, we should have a remedy. So, remedy is nothing but appeal. If the assessing officer has made additions for which we have not agreed, then there should be legal remedy. The legal remedy is an appeal. Whether you can go for the CAT appeals or you can go for the 264 or you can go directly to the High Court also. Appeals and revisions form the backbone of India's income tax dispute resolution. The Income Tax Act 1961 establishes multi-tier appellate hierarchy that allows the taxpayers to challenge assessment orders, penalty orders, and other decisions of the tax authorities. The hierarchy is assessing officer. Nowadays, because I mentioned several times CET appeal. Now the new system has come, JCIT appeals. Joint Commission of Income Tax Appeals or Additional Commission of Income Tax Appeals. Nowadays, you must be receiving notices when we are filing appeal, because when we are filing appeal form 35, automatically we address to the only CET appeals. We don't address either GCIT, automatically the form itself will like that. But based on the criteria or parameters, sometimes the notices issues come Joint Commission of Income Tax. Recently, one company has received, I received one notice from Joint Commission of Income Tax or Additional Commission of Income Tax. Notices, specifically they mention the name also. In the JCIT appeals, additional CET appeals, you will come to know the name of the person easily, and place also comes. Whereas in CET appeals, you don't get. It's a faceless appeals. But JCIT appeal, additional CET appeals is a faceless, but still you will come to know the name of the person. This is different. That's why I added JCIT also, and ITIT, High Court and Supreme Court. And here is, I have not mentioned about the DRP, Dispute Resolution Panel also comes. Once we have an international taxation at a transfer pricing, when first they issue the draft order, suppose we have not filed appeal within 30 days from the date of receipt of draft order, you have a time, 30 days, to file before the Dispute Resolution Panel. If you have not filed, automatically they will issue the final order. The Act is very clear. If it is not filed by the SSC within 30 days of the issue of order, here issue of order is from the SSC point, date of receipt of order. Then automatically they will pass the final order. Against final order, only remedy is you have to go to the CET appeals. You cannot go to the dispute resolution panel. You can go dispute resolution panel only in the case when you have received the draft order only. Once draft order comes, you have time, 30 days time to file DRP. DRP disposes that specific time. 6 months, 9 months they take, and they will dispose the order. Based on that one, DRP directs the assessing officer to give. It is a binding. DRP directions are binding to the assessing officer. Considering that one, he will pass order, final order. So this is the one. I have not captured that one, but I am captured in the next slides. So this ensures fairness, accountability, and transparency by subjecting department relations to judicial scrutiny. Tax litigation in India is shaped not only by statutory provisions but also the principles of natural justice. This is what I learned in my law course. Principles of natural justice, constitutional protections under Article 14 and 265, and landmark judgment that define the counters of appellate powers. Whenever you get a time, you go through this Article 14, 265, and also landmark courses. You will have automatically your presentation, everything will have a sea change. By reading the questionnaire and giving replies to the questions raised by the AO, even in the 263 also. The tax litigation is not merely adversarial, it is corrective mechanism designed to prevent arbitrary taxation and provide taxpayers with procedural safeguard. The Supreme Court in CAT versus BC Srinivasa Chetty emphasized that assessment order must be fair, transparent, and in accordance with the law. This is the one you must be, most of the people knows. You go any books, CET versus BC Srinivasa Chetty is one of the landmark cases. Even during my early days of practice also, I used to follow. Because that time, I used to follow simply whatever is there. Before studying the law course, after that one, I came to know what is exactly why we have to consider this case. But I request you go through this case very, very, very fundamentally for important. CAT versus BC Srinivasa Chetty must be fair, transparent, and in accordance with the law. So, assessing officer cannot take, even though they have a powers is there, they cannot do. They will only do within the 4 walls of the room, but not the outside is there. CET appeals cannot decide constitutional validity. The constitutional validity done only by the High Court and Supreme Court, not even tribunal also. Does not have the authority to adjudicate on the constitutional validity of the provisions of the Income Tax Act. Even though they are others, commissioners are nothing but others of the income tax, but interpretation purposes they cannot do. This power lies only the High Courts and Supreme Court under Article 226 and 32 of the Constitution. Very, very important, these 2 sections. Orders eligible for appeal before CET appeals, section 246A. See, because of the time constraint, because I have to consider penalties and prosecutions also, I have to complete the session by 12 o'clock. Now it is around 11:30. So, these procedurals are all, wherever is there, I'm skipping. Anything is there, you tell me that I'll hold that one. Like what are the things? Any taxpayer, deductor or collector dissatisfied with the following decisions can file an appeal with the Commission of Appeals. So, orders issued against taxpayer who contest the liability. These are all things. Orders for interest due to underreporting of income, misreporting income, refund issuance orders, penalty orders, decisions is there. Orders against legal sector business, orders treating an SA agent representing. So many cases are there. Form of appeal. These are all, I am going to skip this one also. I am talking, appeal can be even the original assessment order and maybe penalty also, both. And procedure in appeal to section 250. See, naturally, when we file the appeal within the specified period of time, then automatically they will issue the notices and we have to give the written submissions. Based on that one, they will pass orders. They also have a time limit is there. Actually, what happens, they have time is where it is possible. The act is very clearly, in every appeal, the JHA appeals or seat appeals, as the case may be, where it is possible. Sir, where it is possible. Where in the case of SSA, there is no question of where it is possible. Within 1 year or something. Where it is possible, may hear and decide such appeal within period of 1 year from the end of the financial year in which such appeal is filed before it. But there are thousands of cases are pending in the appeals. For more than 3, even my cases are pending more than 4-5 years. Because that is favorable to the SSC. They are not disposing. I am thinking like that. Hundreds of thousands of cases are. That's why they introduced the JCA additional seat appeals. At least small cases in this. Same thing. But still you have a remedy is there. If you are there, you can put the grievance also. You can go to the principal commissioner, jurisdiction principal commissioner, and then they can make a request to them so that they will make a priority, then automatically dispose. But for everything, there is a remedy is there. And 46A, production. This is very, very important, I am telling to you. This is whatever the information you have not submitted during scrutiny proceedings, but still you have a right to submit the additional evidence under section 46, rule 46A during appellate proceedings before the state appeal commissioner. Additional evidence. He has not asked something. Maybe he asked some, even in my case, there is one case that happened in international taxation during the residential status, whether he is a resident or a non-resident. And there was confusion is there. He is a resident as per domestic tax laws, but he is a non-resident as per double taxation avoidance agreement between India and USA. And he has not asked, we also not submitted any information. Automatically we were thinking we'll get the favorable, like he is disallowed the foreign tax credit. So we are concentrating more on tax credit is there. Whatever the tax paid in outside country, when we are declaring global income India, then automatically we can get a tax credit. But he disagreed. You are a resident, you are not eligible. But there is no law on this earth. There is no law in the Indian country. Whatever the foreign tax credit, he cannot do. But point is, when we are going appeal, then we have done in-depth analysis. Because I not handled the case in the scrutiny proceedings. When it is coming, I am handling everything, passport copy, all these things, what is the number of days, what is this. Then we are interpreting tiebreaker test, all these things, because it's a big topic. Minimum it takes 2 to 3 hours time only on talking about international taxation, regional status. So we spend in my entire professional practice, I spent more than maybe hours and months only in one case to understand what is the law here, what is the law in America, what is the law in the European law, UN motion, OECD model, Indian model, all these things. Then we came to know he is a non-resident as per double taxation avoidance agreement. And then we quoted international case and case laws, and we have given additional information by giving the passport copies under rule 46A. Sometimes you have to defend your case. You have every right to give. He cannot deny. But only thing is he has to give an option to the SSC. Otherwise, assessing officer can say he has not given any opportunity. So again, he will quote the Article 14 or 265 or anything, whatever is reasonable opportunity not given. He has not given opted for accepting addition. This is the point. This is a very fundamental important. Please understand, whatever additional documents, whatever you want, you can make it. Even if it is not considered any information also, you can produce here. Even additional grounds. When we are filing filing the form 35, and again you missed some ground. Even additional ground also during appellate proceedings you can also do. Not at the time of form 35. You can revise, you can modify, you can submit anything on matter. This is the power. Another point I am telling to you, whereas in the case of seat appeal, he has every right to enhance the assessment. There are so many cases, hundreds of cases are there. when you are filing appeal for one issue, he can also enhance the assessment by seeing other things, because he will go through every file. Suppose if there is a mistake done by the assessing officer while drafting something, automatically he can enhance. CET appeal commissioner is having a power to enhance the assessment also. You raise one issue, you have gone to the appeal for relief. In fact, there is a case, there are so many cases, they enhance the assessment instead of getting relief. So you should be very cautious. Everything is there when we are filing up information, submission of information, all these things. And judicial precedents. See, here is any authorities, because in assessing officer is a quasi-judicial authority also. Sympathetic view, not to deny evidence on hyper-technical grounds. See, you come 15 seconds late, you file the appeal, due date is 30 days, you file appeal in 15 seconds late. Sometimes there is a mistake is there. For anything, continuation petition can be done. Any procedural lapses. Here is substance is very important. Even for filing form 10B, even filing any document is there, any relief is there. You have to be in the system sympathetic view. Issue is small issues cannot be considered. Sustainability is substance is very important rather than procedure. But this is what the judicial proceedings from the past 30-40 years is. They are not worrying about procedure. They are only thinking about fundamentally substance. Here is K. Venkatramaya versus A. Chittamaram remedy. This is also a landmark case in 1963. Ruled that in the interest of fair judgment, the appellate authority should take a sympathetic view and should not deny admission of evidence on hyper-technical grounds. And AO's refusal to accept evidence, SC can file before CET appeal. ITT Chandigarh versus ITO Bhagwan Das contractor. It means the interest of quasi-judicial proceedings is to render justice, not to deny justice by declining admit any new evidence. The assessing officer is also quasi-judicial. So he has to be acting in a judicial manner. He cannot act like his own supreme or monopoly. Landmark, as Srimati Prabhavati versus Shah versus CIT. The Bombay High Court in this case gave a new dimension to the provisions relating to admission of new evidence before CET appeal. The CET appeal was held to be fully justified in examining the circumstances, more particularly when the AO made a disallowance without giving an opportunity of hearing to the SSA on the aspect. Bombay Jurisdictional High Court. Even I also quoted when it's now pending at the CET Central in Bombay, I handle one international taxation in. And powers of JCIT, all these things. Because now time frame is very less, I have to cover two topics. Any doubts are there, please ask, sir. Even appeal when settlement commission proceedings. CET appeals reviews all materials including settlement commission inquiries and can confirm, reduce, increase or cancel the assessment. Again, appeal against penalty orders, other cases, appellant rights, matters not raised by the appellant. CET appeals may decide on any issue related to the appeal, even if the appellant did not raise it. And Income Tax Tribunal is the second appellate authority in the order for the commissioner, but Income Tax Appellate Tribunal, facts is the final, sir. Whenever you go to the High Court, Supreme Court, they don't worry about facts, only legality. Facts are final. Still, whatever you have not submitted before the CET appeal, you can submit the evidence, appeal everything before the Income Tax Appellate Authority. An appeal before ITT can be filed by taxpayer against, they can file against DRP order, they can file against CIT order, they can file against rejection of 12-year 80s deduction also. This comes here. And departmental appeal, 60 days. Time is 60 days. Here is very clear. 60 days on which order appeal against is communicated to the taxpayer or the commissioner. Procedure form. Powers of the ITAT. The tribunal can amend its order within 6 months from the end of the month in which the order was passed for rectifying a mistake apparent from record brought to its notice by the SSA or AO after giving both parties an opportunity of being heard. I mentioned clearly that one also. Decisions by tribunal. There is a time limit is there. And appeal to the High Court under section 260 subclass 260 capital A. It has to be done. Appeal must be filed within 120 days from the date of receiving of the order. and decision by the High Court. Appeals under 260 are they heard by at least 2 judges and decided by this is all procedure. Another one, Supreme Court under section 261. An appeal to the Supreme Court can be made from any High Court judgment in the case of High Court certifies it to be a fit one for appeal to the Supreme Court. Suppose if the High Court order is not favorable, you cannot go directly to the Supreme Court unless and until certificate has come from the High Court. Certified it to be a fit one for appeal. If it is not there, recently in few days back I have read in the Supreme Court they dismissed the case because it is not certified by the High Court. Just like that you cannot. But there are some legal provisions are there where you can go Supreme Court directly. That is a different case, which is constitutional issues. So, effect of order of High Court or Supreme Court. And again, dispute resolution panel, I told you, transfer pricing, international taxation cases, DRP 144C provides fast track mechanism. DRP issues direction to the assessing officer. Authority for advance ruling also. Complex international tax issues valid primarily for non-resident specified categories. Transitional provisions under Income Tax Act. Same thing. They are mentioned about, say, here 356, 360. You can, anyway, after this, they are going to circulate this session, PPT also. And C8 appeal form 35, new form is 99, 36, 115. Time limit is same, 60 days. Here there is a change is there. Timeline 80, 60 days. New act is within 2 months from the end of the month in which the order is sought to be appealed against communicated. This is the difference between new act and old act. In old act, 60 days very clear from the date of receipt of order. New act within 2 months from the end of the month in which the appeal against is. Which is governs on appeals pending versus fresh. And revival of expired limitation for filing appeal. And provisions for avoiding repetitive appeals. And judicial precedents. What is the right of appeal is a statutory right. Cannot be taken away. The CIT versus vegetable product. This is also one of the landmark cases. Excellent way. CIT appeals can examine all aspects including enhancement. I mentioned about very clearly. This is Jute Corporation of India versus CIT, Calcutta High Court. Procedural for fairness, natural justice. Maneka Gandhi, Supreme Court and Maneka Gandhi versus Union of India. Procedural fairness is an essential component of natural justice. Delhi High Court and CIT were Zoom developers held that right to cross-examine witness is available in the appellate proceedings. You can cross-examine also. Appellate authority should not interfere with the factual finding unless perverse. 90 PTC versus CIT in Supreme Court decision 1998. Stay of demand. Still you can 220 subclass 2. And this is also case laws and procedural requirements. This is all I captured on matter. And I'm coming to the penalties. We have only 20 minutes time, I think. 15 minutes, huh? Okay. But we have to accept at least 5-10 minutes because you have given very lengthy on matter. 4 topics. Penalty is not defined in the Income Tax Act. And punishment, suffering or loss imposed by for breach of law, a fine or loss agreed upon in case of non-fulfillment of some undertaking fine, this one. And these are all sections 2025-1961, 270A, Income Tax Act 1961, 439 is a new income tax. Because I covered more in 263, 264, even I was requested to cover more on it because these 2 things are generally covered very less on matter in any sessions. And these are all waiver of penalty, immunization from prosecution, failure to maintain books of accounts. Actually, in the new Income Tax Act and new budget 2026 also, the focus has been shifted from penalty to the fine. Suppose if you are non-filing tax audit within the time, you can file the return, tax audit report, the commissioner, the assessing officer will issue notice to you. They will ask reasons for why it is delayed. If there is sufficient reason, they will drop the penalty order. Now there is nothing is there. Once it is a delay for more than 50 days, 30 days, lump sum amount pay and upload. So fine, just like MCA returns. When there is a delay in filing annual return, 100 rupees, 50 rupees, GST return, same thing income tax also has come. For all things they introduce more in the fine matter. Like compounding of offences, 276B, 276BB, same thing. So introduce in the next slides it comes. More in the fines, no penalty. Only late filing fee and fines. Penalty for under-reporting and misreporting. This is a very confusing section. what is the misreporting, what is the underreporting. Even today, assessing officers, I can say more than 70-80% of the people, even if it is underreporting, they are considering it as a misreporting. Because they have the power, they are the author of the assessment order, whatever they want, they are doing. And underreporting of income, I also captured what is underreporting of income or misreporting of income. A person shall be considered to have underreporting of income if the income assessed is greater than the income determined in the return process 143(1)(a), 270(a)(9) and 270(a)(2). These are all the considered only underreporting of income. Whenever you get a penalty, initiation of penalty proceeding, just see verbatim and text what they mentioned quoted is there, whether that is in accordance with the law or not. If it is not in accordance with the law, then you have a remedy is there. You quote and quote the legal cases also. I'm coming like this. Automatically, whatever the penalty order, it has to be quashed based on the facts of the case and legality. 270 subclass 3. The amount of underreported income shall be in case where income has been assessed for the first time. So misreporting up. In the case of underreporting income, penalty is only 50%, whereas in misreporting income, it go up to 200% of the tax liability. Judicial precedents. CAT versus National Dairy Development Board. The Honorable Supreme Court in 2020, non-application of mind thus vitiating the imposition. Actually, while passing the assessment order, the assessing officer has to act in application of mind is correct. Good application of mind. He cannot do whatever he wants. Very, very clear. This is a binding even entire country because Supreme Court decision is there. And another one, principal CAT versus Srimati Baisiti Ravati, AP and Telangana. Here also, when the charge is either concealment of particulars of income or furnishing of inaccurate particulars of thereof, the revenue must specify as to which one of the two is sought to be pressed into service and cannot be permitted to club both by interjecting one or between the two. So, because the ranging is 100% to 300% is there, 271 1C. Whereas 270A, automatically misreporting of income is 200% and underreporting 50% is there. And Hindustan Steel versus State of Orissa Supreme Court is there. Penalty will not be orderly be imposed unless the party obliged either acted deliberately in a defiance of law or guilty of conduct contumacious or dishonest or acted in conscious disregard to its obligation. Penalty will not also be imposed merely because it is lawful to do so. And another court, I think most of the CS also we are using, Dilip and Sharaf versus JCIT Supreme Court. I used hundreds of cases this one. Primary burden of proof therefore is on the revenue. Here is Dilip Sharaf, they mention about the primary burden lies on the assessing officer, not the SSA, because he is the person who issues the penalty. He cannot say whatever he wants. Burden lies. He has to mention about very clearly what is your violation, crystal and clear and based on the facts of the case. Suppose he doesn't understand anything, he wants to do penalty notice, whatever he likes, he cannot do. It will be cashed before the higher courts. And aspect, Income Tax Act 1961, Income Tax 2025. 115, whatever sections are there, I am mentioning about, like no double penalty. Because in one of the client cases, in 3 years back, he issued notices all sections. How generally SCs claims all sections, whatever, like you must be seeing some software company employees, government employees, they claimed everything. My father is a mentally handicapped, my mother is mentally handicapped, my son, my daughter, all these things. You know, big scam is there. Same thing in one of the cases. All section penalties levied by the assessing officer. And then we went to CAT appeals, we got favorable. Again, department has gone, ITIT is taken very serious. How the assessing officer levied penalties for all sections. Because we argued on merits of the case. I also mentioned about one of the ground is the assessing officer is levying for every section which is relevant, may not be relevant. He has partial structures against the assessing officer. How can he issue whatever he wants using the sections, which is maybe relevant, which is not relevant also. And here is aspect Income Tax Act 1961, 2025. And again you have a immunity is there. Suppose you file, you made the payment of tax as per that one, and within 30 days you made the payment and file the petition, immunity form, then automatically penalty has to be dropped. Penalty immunity only, no additional tax requirement. Here is a new Income Tax Act. Additional income tax, 100% of underreported tax must be paid. Eligibility condition. There is a small differentiation is there for immunity. Once you paid the total amount, no additional tax requirement. Whereas in the new Income Tax Act, additional income tax, 100% of the underreported tax must be paid. Additional condition not applicable. Class G was not there in. Here is additional income tax, 120% of the underreported tax must be paid. And application window, 1 month receipt of assembly order. There also 1 month, there is no change. After officer passing order, assessing officer, here assessing officer, 3 months to accept or reject. Rejection procedure, opportunity of being heard required, a hearing required, so and so. Appeal against accept, no appeal of immunity granted, no appeal, so and so. Here is failure to keep, maintain or retain books of accounts. Penalty Income Tax Act 1961, amendment in February 2000, March 2026, penalty quantum is 25,000, same thing is there. Here is imposing authority assessing officer, they change it to the assessing officer, a joint commission appeals or a commission appeals. Here in the income tax, only assessing officer, whereas income tax 2025, assessing officer, joint commission appeals or commission appeals. Suppose if the assessing officer has not done for this section, automatically they can impose. Earlier they do not have any right or power to impose, now they have a power is there. Here is reasonable cause defense, available 273B, available 470. And failure to maintain information and documents. So penalty for non-furnishing of information under section 92, it's international taxation transfer pricing case. 5 lakhs rupees imposed prescribed authority, there are also 50%. Same thing. 271 AA and Income Tax Act 442. Failure to keep maintain info documents, 92 is the international taxation and transfer pricing case, not maintaining books of accounts. Specified domestic or international document. And penalty for false entry, omission in books of accounts. 271 AAD. Here is not much differences, income tax 1961, 2025. And benefits to related persons, non-profit organizations. Here if you see income tax all blank. Income tax 2025, you see how many is there. Here a repeat of violation penalty, nothing. 200% of aggregate income applied for benefit of related person. So you have to be very careful anamata in the new Income Tax Act. Seems to be everybody is telling there is no difference, only simplification of language. While making simplification of language, they are making so many fines and penalties. Slight, you can say 99% is common, 99.99%, 0.1%, 0.10%, 0.01% is different. And failure to get accounts audited replaced by crypto asset penalty. 271B penalty for failure to get accounts audited. So 0.5% of turnover. Here also see some points they removed. Now in new Income Tax Act, they mention about 200% per day of failure, like crypto, late filing penalty, crypto inaccurate information, 50,000 rupees inaccurate, not correct or due diligence failure, so and so. And fee for default in furnishing return of income, audited accounts and reports. I mentioned about very clearly, if we see for not filing Form 3CA, 3CB, under the old act, nothing is there. They will issue notice and we will give, they will drop. In some of the cases, I got dropped. Some of the cases not accepted. Then I went to appeal, we got favorable. But now, those things are not there. 75,000 penal late filing fee. They are not mentioning about penalty, late filing fee up to 1 month. Even for 1 day delay, I can see even 15 seconds delay also 75,000. And beyond 1 month, 1,50,000 rupees. Failure to furnish accountant's report. 271 BA, Form 3CB for international transaction and transfer pricing, 50,000 rupees. Yeah. And 1 lakh beyond 1 month. And failure to deduct TDS and collectees. I have only 5 to 10 minutes, 5 minutes time is there. So I am summing up on matter. Penalties, prosecutions. Financial transactions and reportable account penalties. And TP documentation failure, country by country reporting, CBCR, TDS statement, furnishing statements, PAN, TAN compliance penalties. And failure to answer questions, sign statements, comply notices. These are also earlier 1,000 rupees, now increased to 25,000 rupees. Now 10,000 rupees earlier, now increased to 1 lakh also. And PAN Aadhaar compliance, our limits are increased for everything. Reduced way penalty, reasonable cause, procedure and limitation for imposing penalties. Prosecution. This is very, very important actually. Those who are particularly in prosecution cases, 276B and 276BB TDS prosecutions. Here is earlier they mentioned about up to 7 years imprisonment, now reduced to 2 years. This is very welcome step anamata. And there also punishment is there. And if you want to go to the compounding, you can do compounding. 2 years in maximum imprisonment, mandatory fine with imprisonment, non-cognizable. Particularly, this is very important for New Income Tax Act. At least instead of 7 years, only maximum is 2 years. But penalties and late filing fees, everything is increased substantially. Failure to afford facility for inspection of books of accounts. And removal of concealment of prosperity to prevent tax recovery. Removes, conceals, transfers, delivers. Section 476, failure to pay TDS to credit of central government. And failure to pay tax collection at source, TCS. 276BB. And judicial precedents. In the case of Vinar and Company, delayed payment of tax. It appears 276B, delay in remittance of tax is there. I think most of the, even there is a delay for 2-3 months also, they are issuing 276B notice. This is very important. Dev Mutikam, Jharkhand Court, Sonale Auto, State of Bihar. But these are all very, very landmark cases. In what are the cases, we can, based on the cases, the CAT TDS or principal CAT TDS, they have to drop the proceedings. Fit case anamata. Section 478, willful attempt to evade tax, penalty or interest. Section 479, failure to furnish return of income. Even failure to file return of income also, rigorous imprisonment, 6 months or 7 years, now reduced to 2 years. Failure to furnish return of income I am talking about. And 480, 481, undisclosed income return and special audit. False statement in verification account and document. And 483, 484, falsification of books of account, books and abatement. These are all fine is reduced. Repeat offences and reasonable cause, defense. Section 487, 488, offences by companies and HUF. 489, 40, presumptions, assets and culpable mental state. And 491, prior sanction and compounding of offences. Section 492, 498, special courts, trial procedure and BNSS application. These are comprehensive comparison of old act and new act. All these things, whatever I mentioned about, this is a comparison is there. It's completely reduced. 2 years, 3 years, 7 years. And judicial precedents. Kisi Builders versus 8080 Supreme Court. When IT80 cancels penalty finding no concealment, prosecution 276 is automatically quashed. Penalty and prosecution cannot survive independently. Again, Madhu Milan Syntax versus Union of India. Delayed deposit of TDS does not absolve criminal liability. Company and directors are liable for prosecution even if TDS is eventually paid with interest. Even they are paid interest also. And Rakesh Agarwal versus ITO, vicarious liability, non-filing. Supreme Court, Prakash Nath Khanna versus CAT. Prosecution is maintainable even when returns are eventually filed late. So, non-filing here is even if the return is filed late also, they can issue the prosecution. And judicial, but these are all very, very important. I request all of you to go through this case laws. Very, very relevant. And these are all because of the time constraint, last 2 sessions I have gone through. Run in just 10-15 minutes for each session. And 1 second. As we conclude today's discussion on revision, appeals and penalties and prosecutions, under the Income Tax Act 1961, let us briefly reflect on the key takeaways. Revision powers 263-264, appeals framework, multi-tier appellate system, CAT appeals, ITIT, High Court and Supreme Court, rectification of mistakes 154, new section 357, judicial guidance, landmark cases such as Malabar Company and subsequent rulings have drawn clear boundaries between permissible revision and mere difference of opinion, ensuring that revisional powers are exercised with restraint and fairness. Practical implications. For us as practitioners, the challenge lies in balancing taxpayer rights with compliance obligations. Our role is to guide clients with foresight to contest unjust orders through appeals or revision and to advise prudently on penalty and prosecutions. In the essence, these provisions are embedding the balance between protecting revenue and safeguarding taxpayer rights. Thank you ICSE Chennai for this opportunity, and thank you all for your attention. Let us carry forward these insights into practice, ensuring both compliance and justice. Thank you very much. You have any doubts or anything is there, still you can ask me. Thank you, Lord. Thanks a lot.
Thank you, sir, for delivering such a detailed and insight session. These are complex areas that are often test our understanding, and today's clarity has been invaluable. The way you connected technical depth with practical application has given us a fresh perspective to carry it into our profession. This knowledge will help us approach challenges with greater confidence, strengthen our compliance practices, and elevate quality of our work. We truly appreciate the time and expertise shared to us. It has been a session that will continue to guide us in our practice long after we leave this hall. Thank you, sir.
Thank you, madam.
Speaker today, Shri TNC Sridhar, JCIT retired, advocate and taxation counselor. With over 3 decades of service in Income Tax Department, he has held key positions across assessment, investigation, intelligence, prosecution, and training. His expertise span complex areas such as corporate taxation, white-collar crimes, and fraud deduction. Beyond his departmental contribution, he has addressed participants at DTRTI centers across India, served as a panelist on national television discussions, and continues to inspire through his writings and lecture. He is also an author of Hindi poetry compilation Khayal and Atma Chintan, with Khayal even prescribed for school students. Adding to his commitment to education, he runs a YouTube channel, Tax Talks by TNC Sridhar, where he shares valuable insights on income tax education, making complex topics accessible to professions and learners alike. We are honored to have him with us today to take us through the technical sessions on revision, appeals, and penalties. Please, sir, please join me in welcoming sir. Thank you.
Good afternoon, everybody. Okay, let them take the photo. Let me smile for the photograph. Okay? Thank you. So, friends, you had a very technical type of session. Now, in this session, I will handle it in a different perspective, because basically what I was told was to give a talk on the deductions under the Income Tax Act 2025. And also, then I said, okay, is it only that much sufficient? He said, sir, can you take exemptions? I said, okay, I will take exemptions also. But question is that I should complete within 2 hours. That's why I requested our coordinator here in that. என்ன மணி 1:30 மணி ஆயிடுச்சுனாக்க அது காதில் என்ன வருதோ அது லா ஆஃப் கிராவிடேஷன் பிரகாரம் வயிற்றுக்குள்ளே போயிடும், மேலே போகாது. ஸோ taking food also is very relevant, especially if somebody is having diabetic problem and all, they should have that food in time and all. So we'll try to see how best. Suppose 1:30 is the lunch time. If we fix up, so 1:30 we'll take a break, have a quick lunch, and then continue for another 1 hour afterwards, so that we are able to do justice to the subject that is given to me. Rules clear to everybody? Before that, if anybody feels hungry, please don't hesitate to raise your hand, because my purpose here is not to download what I have brought here. There are about, if there are 100 slides, I am not here to show you a slide show. Even if I am able to put 10 points across the basics, and it's well received by you. That I'm happy with that. Okay. Because you are all professionals, you have been handling the subject. One day I was walking to one of the officers' cabin. So she said, "Sir, the new 2025 Act has come. Sir, 530 odd sections I have to read." I said, "How many sections did you read in the old Act?" "Sir, 298. But you all passed the order under section 299 of the Income Tax Act." I said, "What is that?" "Notwithstanding anything contained in any other provisions of this Act, you passed the order." So, it is not 298. If you total up the subclause, subsections, these, that, but and all those things, it comes to more than 800. So, you have been dealing with more than 800 sections, but now you are going to deal with only 500 sections. And how the Act has been devised, how the matter has been brought, how it has been more dealt with as far as the exemptions and deductions are concerned, is more on the principles of the bifurcations, so that whenever you are going to refer the Act, it becomes easier for you to understand the basics part of it. That's my primary endeavor on this subject, because otherwise there is no material change as such as the exemptions are concerned. Well, when the Act had been brought in, because 1961 Act was there, it had lived a life of about 60 years. Lot of changes have taken place. In the sense, some additions have taken place, deletions have taken place, proviso, explanation, these, that, everything has been brought in. Now all are subsumed in the main section. So the main section itself becomes a total compiled provision of that. That's why if you will see the first sentence of the new Act says is that this Act to consolidate, the word used is consolidate, and amend the law relating to income tax. That's all. So it is a more of a consolidation section, because while you are doing a spring cleaning in the house, what you do? You throw away which is not required or which has become obsolete, then you bring some new things. Like that you do it so that it looks nice. That's what is the thing. And wherever the words that were used were quite look complicated, or there were chances of unintended interpretation that was taking place, they were tried to make simply. It doesn't mean they were made simply, because litigation will continue. I was talking to Venugopal yesterday. I said, the moment the government said, I am going to tax you, taxpayer said, I am not going to pay tax. He found ways and means how not to. People will always find reasons. Very simple sentence I will tell you. Sri Rama, as per the direction of his father, King Dasharatha, proceeded to the Vanvas for 14 years, along with his brother Lakshmana and his wife Sita. No problem with this sentence, no problem with the drafting, everybody understood, but the taxpayer will ask, Sita whose wife? Because the sentence says, he went to forest along with his brother Lakshmana and his wife Sita. So that his refers to Rama or Lakshmana. That query comes in the mind. So that is how the genesis of this interpretation starts. So the whole interpretation of statute itself is a separate subject. In law we study one full subject of interpretation of law. So wherever drafting is done, ultimately it is a handicap of the language. We can think 1500 words in our mind, but we can only speak 300 words per minute. We can only type about 60 words per minute. We can write in shorthand 120 words. The limitations are there. Every language has got its own limitations. So when the intention is brought into words, the spirit and the letter comes very important. So how these things play a role in the whole thing. That's the game that goes. Main thing about law is that Mahabharata is the story of 5H and 1W. while the law is the story of 5 W's and 1 H. What are these 5 W's? What is the law? Since when is this law applicable? Where is this law applicable? To whom is this law applicable? And lastly, why is this law? And H is how the law is to be implemented. That comes in the rules. What is the law? Where is the law applicable? To whom it is applicable? And since when everything available in the books. But why is this law is not in the books? That is where the intention of the legislature comes into the picture. That's where you try to understand the whole thing. So now, the IT Act 61 has been subjected to numerous amendments since its passage over 60 years. As a result, the basic structure of the income tax has been overburdened, with languages becoming complex, increasing cost of compliance. So many things have taken place now. So, this Act replaced 1961 Act, focusing on simplification, renumbering, and reducing litigation rather than drastic substantive changes in the deductions. It is not guaranteed, because litigation will continue. Neither man like, I did my law after my retirement. I retired in 2012. I did my law after retirement. Then I was a standing counsel for the Income Tax Department in Karnataka High Court for 3 years. I was a member of Direct Tax Resolution Advisory Committee. Of course, then afterwards I studied Sanskrit. I did my MA in Sanskrit also. So, what I meant to say, when the simplification and numbering starts and all, there is how it is denumbered. Now, what they have done very scientifically, they have consolidated the thing wherever they could be tabulated. They have been tabulated. Like that, they have made a consolidation of the whole thing. It's very interesting how we go about that part. So now, we talked about exemptions first. As you are aware, there are 3 areas under the Income Tax Act. One, first of all, up to section 9 when you come, whatever items of income have to be considered under the Income Tax Act are crystallized. There is no further crystallization. It is all crystallized. By section we come to number 9, all income, deemed income, assessee, everything is covered over there up to section 9. So now, from 9 onwards, we start taking the items out of the income to be considered under the Income Tax Act. So first comes the exemptions, where they can be assessee based or they can be income based. That is taken out first, and then the computation starts. In computation, whatever money that is earned and whatever money that has been spent for earning this money is reduced. That is what is dealt with under the computation. So, all the deductions that are considered within the computation part, they are called as internal deduction, have direct relevance to the income, earning part of it. And after the computation has taken place, then you have the set off and all. After that, when the gross total income is arrived at, there you talk about the further deductions, which are from the income which has already been included in your total income, and they are considered as a deduction from that part. It could be incentive oriented or welfare oriented, whatever it is, that will dealt with that. So, today we will not be dealing with the second area, that is the internal deduction. That is in the computation part. We will be talking about the first part and the latter part. Okay. So, now section 10 has become section 11. So, section 11 basically deals with the exemptions. Now, in that what had happened, you all must have come across section 11, 12, 13, earlier 10, 11, 12 and 13 dealt with exemptions. 10 dealt with basically income based exemption, 11, 12, 13 based assessee based exemption, and in 11, 12 and 13 this charitable organization was there. Now, what has happened, this entire gamut of charitable organization which is there in that has been taken out of that exemption area. and have been shifted to the special assessment area in line with special assessment which had earlier dealt with from 158 to 188, that section, that part which are dealing with special cases. In that area, this particular taxation of NPOs have been moved over there. I had given one of my session I had taken here on assessment of NPOs. In my earlier, it is there in your YouTube thing, it is there. Okay, I am not touching that part now. Okay. And even in exemptions, income based exemption also, certain things have been taken out of the exemption and shifted into the internal deduction area. That also we will deal with while doing this part. Okay. Because if basic principles are understood, it becomes easier for you to refer the matters. Okay. So section 11 and 12 are the only areas which talk about in computing total income of a person of tax year under this act, any income enumerated in schedules 2, 3, 4, 5, 6 not to be included subject to fulfillment of conditions specified therein. Now what are these schedules? There were about 100 items of exemptions under section 10, various up to 50 it ran, plus A, B, C, D and all those things were there. All these things have been brought in and they have been classified in various schedules, very scientifically classified. It also requires some further amendment, further fine tuning is still required. It will be done over a period. So now, where the referred section schedules referred are not satisfied in any that income enumerated shall be taxed in that year, because wherever conditions are stated, subject to these conditions, these exemptions will be available, and if those conditions are not satisfied or contravened at a later point of time, it will be taxed in that year where exactly the contravention has taken place, not in the year in which it had accrued. Okay. That also made very specific in the act itself. The person enumerated in section schedule 7, subject to fulfillment of conditions therein, whatever section 7, schedule 7 says, that takes care of it. And similarly, whenever such provisions are contravened, it will be subject matter of taxation in that particular year, part of it. The central government may make rules and all those things. Now, regarding political parties, political party exemption has been retained in the exemption area. Except political parties, all others are moved either to the schedules or have been moved out of the exemption area. Okay. So, in this political parties and electoral trusts, there are two kinds, which are whatever income that the political parties may get by use of the assets of the political party or by received by donations, normal donation, anonymous donation. Regarding anonymous donation, the principle is very clear. I always use the story of, people go to Gaya. Why people go to Gaya? Pindadan, Shraddha. The moment you go to Gaya, the moment you go anywhere near that Vishnupada temple, the Pandas will catch you. Shraddha karo. You said, no, I have not come to do the Shraddha, I have come to visit the temple. No. Why you have come to Gaya? Shraddha karo. बोलता है मेरा बाप जिंदा है, my father is alive. Is it? Where is he? He has not come with. No. Why you have come alone here to Gaya? If you have come to Gaya, you should bring your father. If you have not brought your father, having come, you perform the Shraddha here and go. You, fortunately, you take your father along with you. He is my father. You say, come here. You are his father? Okay. You get away? Come on, you do the Shraddha. What is my job? To do the Shraddha and collect my fees. Income tax is also like that only. In Hindi they say, Baap dikao, nahi to Shraddha karo. डोनेशन है, पैसा किसका है? You show who is the owner of this money. If you don't show, then I will treat it as yours. You will have to pay tax on that. So that is how the whole system functions here. So unanimously you cannot say that no, I don't know who has given the money, money has come to me and all. No, you pay tax unless you are able to explain that part of it. In fact, in one of the situations, I had been to a mutt, that is religious institutions. In Karnataka, you got a lot of mutts. One mutt I found, there were 3 places where money was kept. One money was what is received as donation from various people, that is recorded. One was hundi collection. And third, the Swamiji was running a court. That is, their community will come with some disputes. They will say, okay, Baba, you deposit this much money, we'll resolve the dispute, then we'll give back the money and all, we'll put the money separately. Not accounted anywhere. So, unfortunately, my hand went into that. 27 lakhs cash. I told, whose money is this? It belongs to people. I said, which people? Many people come. I said, I don't know. Who am I? I am from गया. हमारे पास जो आया वो गया. Collect. Then Swamiji said, no, how can this money? I said, you tell me from whom you have got this money. If you are not able to tell, I will treat it as your income and tax it. Unexplained cash available. Similar things will come in that. Even though as a trust, as a mutt, they were running religious charitable institutions, they were entitled for all those things, but this definitely did not work on that. Okay. Now, schedules contain 146 items of exemptions. All schedules. Schedule 1 talked about income not to be included in total income. That is, it is income based. These are the income, these 17 items which are specified in the schedule are not to be treated as income, even though they come within the definition of income. The next schedule talks about income not to be included in total income of eligible person. In others' hand, it will be taxable, but in case of eligible person, it will not get taxed. That is 43 items. Then 4th schedule talks about non-residents. Non-residents and foreign companies which are there, what are the items that is put over there? 17 items. Then income not to be included total income of certain eligible persons, including investment funds and business trusts. Now, you will be wondering why they have a separate treatment and the unit holders. Income Tax Act is not only a revenue enactment. It is a socio-economic dynamic enactment. Why do you call it social? Because what does the government do having received the money? Tax. It has to spend. It has to spend for the welfare of the people. So, for doing that, various special purpose vehicles are there. So, since that money has come and it goes to those special purpose vehicles which are again using it for the welfare of the people, they don't get taxed again in their hands. And people who buy the units, who contribute to that by way of buying units and all, whatever income they get out of it, because their purpose is dominant motive is charitable in nature, welfare in nature. So, to recognize that part, that issue is covered here. So, these entities which are investment funds, business trusts, etc., units also 8 items are there. Income not to be included total certain eligible persons of international financial service centers. Now, why international financial service centers having? Because the trading part of it, we may be able to raise money in India, but we may require to have foreign funds also coming in for some activities, which is ultimately for the welfare of the government, not for profit making area. But when such things come, what are the items that should be considered here? So these entities are identified and put in a separate schedule. What are these items? That is there. And seventh is talking about persons exempt from tax. The first one is income exempt from tax, irrespective of the person. Well, here it is the person who is exempt from tax. These are the entities mentioned. So if you total up 146 items, because in that also earlier 142 was there. Whatever I put star, the 7-8 items which are added up, which have been come by way of amendment in 2026 budget. 8 deals about political parties. Okay. Now, what are the 17 items that we have been dealing with? Agriculture income. What I have put on the left side is the old section 10.1 dash 1 of this schedule list for you for a ready reference. Okay. Why agriculture income is not taxed? Because agriculture is a state subject, but included for rate purpose. That is a separate issue. I am not on that. Okay. Then comes any sum received under life insurance. Now this was in 10D. 10D was there. It has been brought to serial number 2. Put here. That is again life insurance is a welfare measure. So whatever money that is received by way of bonus or by this and all will be have the exemption. It is a welfare in nature. Provident fund, etc. Recognized fund. Provident fund. What is provident fund? Provident fund is a word which originates from the word providence. Providence means providing for future, rainy days. Today I may be young and strong. Of course, I am 74, but still I am young and strong standing in front of you. Okay. So now, with this, I am able to earn, but I may not be able to earn after some time. At that time, that provident fund provides me the fund for my livelihood. It's like a, pension is not a what you call as the bounty. It is to live in the dignity of a person who has become old and is no longer in that earning capacity area. So when such things are taken, that providence is taken. But there you have got recognized provident fund, and you have got regular under the Provident Fund Act, whatever is there and all. Then you got Sukanya Samruddhi account. These were the girls thing that has been there. Now here you will find this side 10, 12A, 12B, 6 and then 80cc CCD, that side. If you go to section 80, which can be vertically divided into two areas. One area regarding the money that goes out of your pocket, and second, what comes into your pocket. Up to G, what money goes out of your pocket. 80C, 80D, 80E, E for education, D for doctor. You remember like that, easy for to remember. Where is 80D? D was a doctor, that means medical issues. E means education, whatever is that. So, G, gracious. When you become gracious, you donate. You become generous. G is generous. So, you generously give donation to the people. That is G. So, whatever goes out of your pocket are dealt with. So, these 80cc, 80dd are the expenditure, outflow areas, but inflow area is covered here. Outflow area is covered over there. How new pension scheme, inflow area comes when you receive money from the trust. But when you contribute to the trust as a part of the trust condition, that comes under 80. And when you receive the money from the NP, it comes over here. This new pension scheme is again dealt with in 2-3 areas. 2-3 items it is included. Now latest which has come is unified pension scheme is there. There is another which has come recently from 2025. such payments on closure of the account. So money can come from pension under closure of an account, or it can come by way of the conditions having been satisfied, like superannuation. You come. You can close it beforehand also. So when you close, when your money comes, like LIC, you can surrender the policy before the maturity. That comes by closure area, like that money will come. Then of course, limit is set there, up to 60% of the amount payable, that much is there. Aggrieved corpus fund. So when a person is admitted as an aggrieved, he contributes to the fund, and when his period is over, he gets back that money. So even that, because again it is a welfare measure, whatever money he contributes, that is covered under 80 CCH, but when he receives the money, it is covered under this area. So this is what is the things goes over there. And any payment from approved superannuation. Superannuation means when you are retiring after attaining the retirement age as specified by your service conditions. I was talking to the officers who were retiring in Bangalore. I asked them 2 questions. When should you retire? And when do you say that your children are settled? Or what do you mean when you say your children are settled? You should retire when? When the work that you are doing is no longer passionate to you. Today I am standing in front of you. I have not retired because I am passionate about this. Department might have sent me home for 14 years back. Man, sufficient, 60 years over, you can go now home. I will give you a pension, no problem. But I wanted to work. I can't work in income tax department, but I can work related to that. It's passionate, I am continuing, I have not retired. So the day I find it no longer passionate, I will retire. There are many chartered accountants who retire, who say that enough of practice, I will not go any further, I will retire and relax. Okay. Second is, what do you mean by children are settled? Oh, they are married, they are settled, they have got a job. And no. As long as they don't ask money from you, they are settled. So it is immaterial of whether they are married or not married or job, anything, it has no meaning. But if they are on their own and they are not dependent on you, then you tell that they are settled. Okay. Now, scholarships, education. Education scholarship is for upgrading. Again, society is going to improve because when you are going to fund a person for education, he is going to become a better citizen and contribute to the society. Welfare measure starts in. That is exempt. Then, any payment made whether in cash or kind in any award or reward. That is recognition of a service. This is different reward from the award and reward that is given for gallantry. That is different. This is general reward. Like, I don't know whether you have the system in Tamil Nadu. In Karnataka, you have got that Rajastho awards are there. On that day Karnataka was born, that day they declare. Even in central government, you have got that Padma Shri, Padma Bhushan, but they are not followed by any pension. There is no monetary benefit for the Padma Shri awardees and all. But in state government, when they have some pensions also attached to that and all. Some of the things are there. So whatever awards and rewards are received, recognition of the services to the society, they will not get taxed accordingly. Income of interest premium, redemption on such securities, bonds, annuities, certificates, savings, etc. Now this area, even when you see section 80C, you will find that some contributions get exempted 100%. Some get exempted 50%, depending upon that. Because this all will depend upon what is that fund doing. If that fund is for a particular upliftment of a particular area, then whatever contribution that goes towards that fund may get, like PM relief fund, you get 100% relief on that. But charitable institution you pay, you don't get 100%, you get only 50% of that. Depend, like that. It is a policy decision that the government takes. So these certificates, etc., bonds, etc., will depend upon the purpose for which those certificates are set up for. That will depend. Gold deposit is something new that has been brought in. Gold deposit issue. That is, other day I did one episode on gold. What is gold investment, how it is done. You can buy physical gold. You can either buy bullion, or you can buy ornaments, or you can buy bonds. Now, when you buy gold bonds, what is that? Investment in gold, digital gold. You got 1 lakh to invest. You have an option either to invest in digital gold or buy gold biscuits or buy ornaments. Now, what happens in these three? When you buy a gold biscuit for 1 lakh, you get that weight worth whatever is the value as on that particular day. You have the gold, physical gold in your hand, but you have to protect it. You have to either put it in a locker or always have the fear that somebody will steal and take it away, and all those things are there. But when you go to sell again, you may get the value of it without any depreciation on that. If it is, say, maintained, caratage is maintained, certified. Because I have also come across gold biscuits of 60%, 60 touch. What is the meaning of 60 touch gold? 14 karat gold. Made to look like 24 karat gold. It is sold at the rate of 24 karat. But what is given to you is 16 karat. This is separate. I came across in a course of search. Things happen. The guy is doing it, no problem. Even ornaments. 22 karat, 24 karat ornament can't be made. 22 karat ornament is made. But how do you test? By putting it in the kasoti. Which part of the ornament do you put it on the kasoti? Only that hook. If there is a pendant, have you seen that pendant part that fellow is doing like this? You say, you won't allow that to happen. So you will put the hook. So that goldsmith makes that hook in 22 karat. And the chain he makes in 14 karat. And the pendant he may make it in 18 karat. You will never know. Best of the best jewelers also cannot. There is no machine which has come that you can put it on that and check the caratage of it. Anything can happen. Only you will come to know when you are going to sell it. It happened in my own case when my wife's tali was, after a few years it became black. It was made by some jeweler in Mambalam here in Chennai. It became black. So how can gold chain become black? So my wife said, let us get it polished or get it, put it and buy another one. When he went, he checked, he said, sir, ye to 14 karat. So what do? We immediately took it back and sent it to my uncle in Mambalam, told him that what is this? This fellow has made a 14 karat tali. The jeweler said, sir, naanga enna sir pandrathu, naanga avanga kaila kuduthudrom, enna panni kudukurom, ungalta kudukurom. Cheatings can be done at any point of time. And what happens when you buy a jewelry? You buy more for the design. You like it, you pay more. But when you go to sell, it is only gold. They will reduce wastage. They will do this, they will do that. So many things will go, you won't get 100% back. But in primary gold, you will get the thing back. Value of it you will get. But in gold bonds, gold certificates that you take, total value benefit. There is no question of any depreciation, there is no question of any wastage. There is no question of concealing 14 karat or 12 karat or something like that, nothing like that. And the day you want to redeem it, the value of gold on that day, that much credit will be given to you. So as an investment, that helps you. So this is linked to value of gold, not interest. It has nothing to do with interest element. It's got that one. So there in the scheme, monetizing scheme, that is kept with the linking up with this, so much gold body. Then the government holds that gold that much. Gold is there with the government only bonds are declared, so that monetizing takes place without the physical movement of the gold. So they are able to appropriate, the government is giving that particular certification. Interest on bonds are by local authorities and state pooled finance entities. State government, any government deems money, it needs money by way of taxes or by way of loans or by way of issuing certificates. Various bonds are declared. So whatever interest earned from that. Now what is happened to local authority, there is a separate exemption is there. An entity, there is coming another schedule. Not in here we are talking about only the income part of it. Any income of transfer of asset being a unit scheme, unit or UTI schemes are there. That is also a welfare scheme, from that you will get this. Then NPS trust under unified pension scheme. We had old pension scheme up to 2005, then came the new pension scheme, and now it has come unified pension scheme. Pension is, of course, it is called as deferred wage. It's equated with salary, accordingly you get the money there. But then the scheme that is going, they undergo changes. It also carries certain insurance. For example, you talk about commutation of pension. What is commutation of pension? That was dealt with under exemption area, but now it has been taken into section 17. Under the computation area it has gone. From the exemption area it has gone to computation area. What is commutation? Whatever pension you will get for a 15 years period, some extent you can take it in beginning itself will be given to you. It is more in the form of a loan on which interest is charged and recovery takes place. So when you receive it in bulk, it gets, because you can discharge certain liabilities of that, because you are no more in that earning range, you are able to do that. That is the extent. Anyway, it is recovered from you all the time. So that is also not getting charged. So now unified pension scheme is a new scheme that has come with effect from 25. It is a new scheme. So such payment at the time of superannuation or voluntary retirement or retirement under 56J. What is 56J? 56J is compulsory retirement. Now, when does the government resort to compulsory retirement under the fundamental rules is that? The rule is very clear. It says, on review of the performance of the officer, if there is a declining element of efficiency and it is not possible to hold an inquiry, the person can be retired under 56J. A person may not do anything wrong, but he may not be working. Probably only person who cannot make any mistake is the one who does not do anything. करेगा तो गलती होगा ना. If you don't do anything, where is the question of mistake? So you cannot be caught. So there is no punishment for not doing anything. Of course, there are provisions called commission and omission. Like we were discussing now about officer does not pass the order, then what do you do? That time I said you can go to writ of mandamus. What is mandamus? Mandamus also is a word derived from the word mandatory. What the officer is mandatorily required to do, if he does not do, he can file a writ of mandamus and the court will direct that officer to perform that mandatory duty. You have gone to take a license, driving license. You have been declared pass, but license is not issued to you. You don't receive the license, 6 months, 8 months, you go and out, they go, coming, not coming. Then what do? You need license. You can go to the writ, you can file writ of mandamus, direct the RTO to issue the license. So that can be done. Okay, anyway. So this 56J is specifically under fundamental rule which is not treated as penalty. Again, because it is not a penalty, again there are major penalties are there in that case if any wrong thing is done by a government servant. Penalty is also there, compulsorily retired under this 56J. But where it is not as by way of penalty, only by declining efficiency or the department wants to trim down the department, they want to offload certain people they are sending home, those areas whatever receive will get the benefit under this scheme provided under. Okay. There again, the limits are there, 50%. Shifting from NPS to UPS, that is new pension scheme to unified pension scheme with effect from this date. Scheme is applicable to new recruit joining the central government service in this time. Any sum received a lump sum amount from MPS. Earlier also you saw some lump sum amount may be received. It can be by closure or receiving lump sum, whatever. There are different types of receipts that is there, that is dealt with in this part. Okay. Now, lastly, 17th item talks about some existing provisions of 1961 Act. Section 15. What are these subsections which are there? They are securities under same thing, same whatever existed there in 15, same thing is carried over as it is in subsequent part also. So, interest by industrial undertaking of India to the extent to which such interest does not exceed the amount of interest calculated the rate approved by the government. Whatever government approves, that is only the limit. Over and above anything is paid, is not getting the benefit of exemption. Now, Industrial Finance Corporation, Exim Bank, from there whatever is received. Similarly, under the Banking Regulation Act, whatever is received over there to the extent to which such interest does. The same formula will apply when such cases under section 15, whatever is there, the limits are prescribed, up to that limit they are going. Okay, I will go to further part because I have to keep time in mind. Now, schedule 3 talks about income not to be included in total eligible persons. First part we talked about income itself. Now we are dealing about eligible persons. Member of HUF, whatever he receives from HUF is not taxed. Why? HUF itself is taxed, no? We are already taxing HUF. From there again you are paying. Same formula for the firms also. Partners receiving that. But anything over and above excess, which is not taxed in the hands of the firm, will get taxed hand in the firm, the recipient. Like for example, remuneration is paid. Remuneration is claimed as a deduction by the firm. So that is not getting taxed in the hand of the firm. So it will get taxed in the hand of the individual who is receiving it. And whatever prescribed things are given, which are disallowed, anything paid more than the prescribed amount, like even for fixing remuneration, the partnership deed should specify how much that person is entitled for remuneration. He is entitled for remuneration only to the extent of 10% of profits. If you pay more than that, that will get disallowed. Now, what is disallowed there and taxed in the hand of the firm will not get taxed in the hand of the individual. Again, double taxation will be avoided. That is the principle behind this particular part. Any amount received as a compensation for disaster. Disaster, natural calamity, which is prescribed, on that whatever compensation is received is not taxable in the hand. And again NPS comes into this. Here again, under the pension scheme referred to in section 24, that is again 80 CCD, 124 talks about employees and employers' contribution toward the pension scheme up to the prescribed limits. Then daily allowance of MLAs, MPs. Now here I will tell you, somewhere in 2007, the provision of law was like this, that MPs daily allowance and all allowances were exempt. But in case of state legislature, the allowances were allowed only to the extent of 2000 rupees. Many people income tax never looked into those areas. So sometimes what happened, when we have little relaxed work, we start looking into those sections. Like we have one section called 2E, deemed dividend. It is there since time immemorial, but nobody looked into that. Very draconian section. If you read section 222E, correct? 222E. Any amount drawn by the director will be considered as deemed dividend. He may draw the money in the morning, deposit in the evening. Deposit is not talked, no set off. Whatever you have drawn, immediate deemed dividend taxed. Huh? Yeah. That's right. See, it was a draconian section it was. Because probably the framer of that drafting did not visualize some situations at that point of time. It created a lot of, because somewhere in 2007-8, these people got up on that. Income tax department people got up on that. Even while dealing with my episode on gold, I said, when you are exchanging gold, because the ladies have the habit of updating their jewelry, they take their old jewelry, make some new items and come. What does the jeweler do? On paper, he buys the old gold and then he makes the new jewelry and gives you. Now, if the old gold was purchased more than 3 years back, then it is exchanged at a different value. The difference of value will be subject to capital gain. Has anybody offered? Have you come across anybody offering this? No. What if tomorrow department gets up and start questioning bill of old gold purchase? When was this purchased? That one? No. If you got no bill, take it as you purchased today, take it as a short-term capital gain. Where do you stand? If no short-term capital gain, then I will say investment, unexplained investments. Somewhere you will find the root of taxing. So, such minor things, of course I am little deviating from this topic, but giving some input to you of new thinking part of it, okay. So, there what happened when I was in Tumkur, one day I was just sitting and I was just reading Income Tax Act. Suddenly this section 17 came into my mind. The MPs and MLAs, MPs ko chodo, no problem, but MLAs only 2,000, but they are getting more allowance. Constituency allowance, this allowance, that allowance, petrol allowance, telephone allowance, electricity allowances, clerk allowance, everything, but only they are entitled for 2,000. Okay, let me see. So I wrote to the government, that DDO, as to where are they assessed. Their option, an MLA has got an option to file it in Bangalore or to file it wherever he is staying. But another rule says, jurisdiction, all representatives should be with the DC, not with ITO. But I never had any MLS case with me. I was a DC there. So I just wrote a simple letter to them. Sitting MLA, 7 people were there. I wrote to them letter. Please let me know whether you are filing return, income tax return. If so, to which officer you are filing. If it is Bangalore, no problem. I will send that officer. If it is with me and you are not filed, I will ask why you are not filed. Very next day morning, I got a call. Sir, congratulations. I said, what is there to congratulate, Baba? Sir, nobody has dared to write any letter to these MLAs, such rogues and rascals. I'm sorry if I am using these words. But I said, what is there, Baba? I didn't mean that. I asked only a simple question. So he said, no, sir, nobody has dared to ask this question. I said, provision of law is there. Afternoon, 2 PS came to my room. Sir, some notice you have sent. I said, what is this notice? I am only asking, Baba. I am not sending any notice. I am only asking you. Where are you filing the return? No, sir, I will file the return. I said, I am not asking you to file the return. I am only asking you, where are you filing the return? And whether these things are covered in that. So what I meant is, many of the area department is also sleeping over it. You as a chartered accountant, you are the officer, technical officer of Government of India. Remember that. Just because assessee is paying you, you don't become assessee's man. You are very much the man of the Government of India. You are certified by your chartered accountant association, which is the body to certify your knowledge. That itself is a creation by the Chartered Accountants Act passed by the Parliament. You are a part of government. It is your duty to bring it to the notice of those people, to see that this is the provision of law, this is how you have to go ahead. How many of you do it or not do it, I am not on that. But This is your duty to see that. Okay. Officer sitting on the other side is not your enemy. You are there to help him. Like an advocate is called officer of the court. You are the officer of Government of India. Okay. But not paid by the government, but you are paid by the client. Okay. So now this constituency allowance. Later on what happened? In 2008, it resulted into an amendment, wherein they brought all the allowances in par with that of the, but respective state government has to pass that. That is why this is split into three areas. One, it talks about daily allowance of MPs and MLAs. Second, it talks about allowance of MPs under that and allowances of the MLA. So, three different parts it is split into three to be more clarity on that. Okay. Because each state will have a different kind of a thing. Leave travel concession and leave travel allowance. What is the concept of leave travel concession? Why should you get travel concession? I am traveling for my pleasure. Why should I get concession from tax relief? The principle behind granting of leave travel concession is that you should take leave, you are working, you need to take break and you have to travel across the country, not international. दुबई जाने का नहीं मिलेगा, डिब्रूगढ़ जाने का मिलेगा. When you move from here to another part of the country, you are not going yourself to see the trees and the mountains over there. You are carrying your culture. Similarly, people from that side will come here. There will be exchange of culture and the diversity of the country will get unified. Unity will develop. And the national unification, that particular principle behind it. So, to encourage that and to encourage people to travel. Not that you take 3 days casual leave, book a ticket from here to Tinsukia and then cancel the ticket, take back the money, produce this bill and then take a claim of deduction. No. That is not the purpose of this section. Okay. People do it. We know it. So, these are the conditions for that. Okay. I think I am not telling you anything new, but only I am trying to put it in a different perspective. Any perquisite allowed such outside India to a citizen of India rendering services outside India, provided that is approved by the government. That is there. Then income in nature of perquisite, an employee being an individual, such perquisites of non-monetary perquisite within the meaning of section 17(1) that is covered here. But here some sections move, there are some areas which have gone into the section 17 of the computation part has gone, that will deal with it little later. Special allowance, expenditure for the rent payment, house rent allowance that is taken care of. Okay. So, another 5 minutes we'll break for lunch. Okay. You can wait for 5 more minutes now. Lunch is ready now? Oh, pahla, first. Okay. Because I should take care of your stomach also. After that, you have working lunch. Why it is called working lunch? Because it starts working after lunch. Okay. That I will see that you don't droop your eyes. That is my job. To see that your eyes are kept open. Okay. So now, any allowance granted personal expenses that is equal to 1014, which is for wholly, exclusively and necessary for the purpose of performance of the duty. Now, here also some amendments came because a drafting difficulty, like travelling allowance which was paid for the performance of duty. Travelling allowance granted to a person for performance of duty. Because every day you go on giving him voucher, they say will give you a lump sum amount as your travelling allowance, you travel or not, this is the allowance. If you spend more, you spend more. If you spend less, they keep it with you. Now, for the performance of duty, that is when you are to go for a job outside somebody you are going for performance of duty, whatever allowance is given, that is not considered part of your income. But for the person, when does their duty start? Does it start the moment you leave the house or you report for duty and from there you go out? So whether that is covering the travel between your house and the place of work. That is where it came as for the performance of duty, means it can, because interpretation can go that way also. So it said in the performance of duty. Instead of for, it became in the performance of duty. So how the amendments also take place are very interesting. Every comma, full stop. Like, in your house, when you do spring cleaning for Diwali, lot of things that we have to get rid of all the things. So you pull out lot of things to be thrown out. Picking up, and you are picking up one piece of paper. Oh, what a small drawing I drew when I was a child. How can I throw it out? I'll keep it here. You pick up one old bicycle of a child. Child has gone, got married and gone, but cycle is still there in your loft. You take it out, and then you take it. No, then you say, oh no, the screw has become loose. I can tighten it. It can be used. You put it back again. So lot of things come and go back like that and all. Okay. So now in income tax, everything has got a justification. That is where why is very important. Okay. Pension received by awardees of this Mahavir Chakra Gallantry Awards, which is received by that. Not only them, but the person is killed and then his family is getting a pension. That is for the sacrifice he has done for the country. So the family is also covered in that pension. So if you see, everything has got a meaning behind it. Family pension received by widow or children, nominated heir of the member of armed forces, including paramilitary forces. Previously the word used was only armed forces, but paramilitary forces was not included. So now paramilitary forces has also been included here, of the operational duty in the circumstances subject to such conditions that we prescribe. Now operational duty, that is in the field when performing the, suppose one is going on a terrorist attack is there, he is going to fight that, at that point of time he gets killed. Is operational duty. Award is there, pension is given to the, special pension is given, that is getting covered into all those things. In this case, I remembered of one very old incidents when V.K. Krishna Menon was the defense minister. Previously, these schemes were not there. Whether a person, when a family is entitled for pension, because family pension itself came much later after independence. So, but a provision was there when a person is killed in operation, then they are entitled for family pension. So, one lady, a widow, put up an application for a family pension. Some babu sitting there wrote, it was not operation. So he was sitting there, one fan fell on his head and he died. So he is not entitled. So he wrote, not entitled. The file went one step ahead. The officer wrote, yes, I agree. The file went further. Yes, it's very easy to agree. Yes, I agree. Yes, I agree. I agree. Everybody wrote the whole line, all the line from the deputy secretary, this secretary, that secretary, everything came. Finally, it went to the defense minister. So V.K. Krishna Menon saw the noting. One line is written somewhere there on top, and all officers have written, I agree, I agree, I agree. So he wrote, why agree? Why agree, why agree, why agree, why agree, why agree? Then when it came to the immediate superior officer, to that fellow who denied, he had to apply his mind. And when he applied his mind, then he found that he had to give a reason for why he is agreeing. There is every possibility that the officer may not agree. But he has to give justification. So then the differences came as to why agree or why don't agree and all. Then ultimately when it came to the defense minister, it came that majority were said that the officer is entitled for family pension. So what happens? Routinely you can push the files and go. But when it becomes like that. Okay. So what we will do, we will take one more slide and then we will break for lunch. Okay. Any income arises to any source or areas or state mentioned in these areas. The people residing in certain areas. like northeastern areas and all, because they are, sometimes what happened while when India became independent, somebody came and drew a line and went. And many states culturally whether they are part of the country or not was not clear. Bangladesh, one East Pakistan, once it became that state, whether they are culturally attached to the other rest of the country or not was not. No language, this one and all they put, because they all are, the northeast had a Mongolian race. They were more towards Chinese or Mongolian race. So every possibility that this part could go to China. But since you drew the line, McMahon or whoever was that, you drew the line, it made part of it. So, but how to include that place into that? So then we have to give some special benefits to that area and see that. So they were encouraged to that area, people who are living in that area, those who originate from that area will get the benefit of tax benefit. So to keep them as part of the country, it has gone. I've been to Tripura, I've been to Northeast. If you go to Tripura, you don't find any difference between the people. They look like, they are not Mongolian race people. They are very much like us only, they look like, very often go like that. And because there's a, Veer Bikram Singh was the king of, it's the last state to become part of it. Somewhere in 1956 only it became part of India. It was a separate country. It was not annexed at that point of independence. It was attacked much later, Tripura. Tripura itself name comes from the Tripura Sundari. From that this name has come, Tripura. There is a temple of Tripura Sundari there. Okay. So these are the various states who are living in the northeast region, are living, those people are given benefits. Similarly, Sikkim. Sikkim was also annexed to India at a much later point of time. So those people from there, hailing from that place, they will not be getting the, they will not be liable for tax. That is to encourage people unifying the country, that particular thing has been done. Then similarly, subsidy given for tea plantation, coffee, rubber, cardamom, etc., only where you have to replant. Like if you go to the, see, one thing advantage I have got being in income tax department is that I have come across the varieties of businesses. Like tea. What is tea? Entire tea plantation divided into 8 areas. You should also know, as a chartered accountant, you should maybe dealing with tea estate, but you should know the areas, how they are divided. One is growing area, where the tea is grown. Second is the passages, and there are some rocks where nothing grows. Then there are wood, firewood areas where trees are grown. And there are places where the laborers are staying. And there are places where schools and colleges, schools and hospitals are there. Places of worship are like that. The entire is divided into 7-8 areas. And tea itself has got a life of say 60 years. First 10 years nothing is grown. Another 20 years tea leaves are just plucked and it is thrown. It is not used for making tea. After 40 years only, 40 to 60 years is the tea which is actually made into your tea. Orthodox tea and CTC. What is CTC? Cutting, turning and curing. That is CTC. You might have heard about this CTC, but you might not have come to know what is CTC. Orthodox is the normal way of, by heat, you dry the tea leaves and how you make it. So it goes like that. So for that purposes, what happened? You have to remove that replantations you have to do. That requires money investment. So government gives subsidy so that the farmers keep growing over there. So whatever subsidy is given in these areas are not taxed. That is getting exemption. So friends, at this we'll break for lunch. That all patients have come. Doctor was late. Okay. Thank you. That shows that you are still in the heat of learning. So it gives me more, infuses more force in me with that. Okay. This is not, may not be, if I am not, whatever able to complete. Whenever institute will call, I am there. I will be there here. I have no problem. Okay. Make it a point. Any other subject also, I will be here. Okay. இப்போ வந்து local authority, income of any local authority which is chargeable under the head income, house property, capital gain, income other sources, or from trade or business, income from trade business eligible for exclusion arises supply of. That's very categorically commodities or service not being water and electricity. Subsequently, water and electricity separate outside the jurisdiction. even first part talking about within jurisdiction, second is talking about including inside as well as outside jurisdiction also you can supply. Like for example, like Bangalore electricity supply may supply to rest of the places also can be taken. So any income of research association similar to that place, because they are the development of the country, and local authority is ultimately it is for the welfare of the people. That's the way it goes. And we should think into that particular angle. Any income of an association or an institute established for having object, control, supervision, regulatory engagement of professional law, medicine, accountancy, engineering. Unga ICA itself is a body which will be covered under this. Your institute covers. Similarly, you will have a bar council, you will have a Indian medical council. So many aspects are there. All those things will be covered in that. Where main object is to establish for these particular purposes. Okay. Then Khadi village, propagation of Khadi. That is village industries எப்படி develop பண்ணணும், அதுக்காக backward areas எப்படி develop பண்ணுறது, all those things are there. Then activity of securitization of the securitization. Securitize பண்ணுறதுனா securitization, that is you make it into securities. When you take the loan areas and all financial areas, there are securities which are charged in a way that how the priorities will come. Ultimately, all these things will have a nexus to the protection of the investors. Any investor who puts money, நாளைக்கு அவங்க ஓடிப்பட்டனா அவனுக்கு என்ன protection இருக்காதுல்ல, அதுக்கு certain controls will be there. So all those institutions are covered over there in that. Similarly to stock exchange, recognized stock exchanges which is there, and such funds. Apro you have got this commodity exchange board and also depository. They all fall in the same category, but same condition, whatever conditions are mentioned, A and B apply for all these two also. That then come core settlement guarantee fund received from specified persons. Who are the specified persons? All those aspects are given over there. I am not going much deep into that. Okay. Idhula only jaasti concept explain pandra mari illa. Registered trade unions. Ultimately, what is trade union? It is a welfare activity to get the no injustice done to the people. Of course, whether the trade union leaders are really doing injustice or not, that's a separate issue. They say in a right capitalistic country, it is the employer who exploits the labor, and in a communistic country, the union leader exploits the labor. In either way, the exploited community remains the laborers only. So anyway, that particular trade union, trade union acts, that is also now in the last year that wage codes came into existence. The entire 29 labor laws were subsumed in 4 codes. One was called wage code. Wage code la this talks about minimum wages act, payment of wages act, payment of bonus act, and equal remuneration act. In the 4 act it was brought into one code. What is the difference between act and the code? Act is a one self-contained legislature, act of legislature. A group of acts is called code. When you say Indian Penal Code, that means what is mentioned there is in respect of all the codes, wherever you will have that penal section is to be brought in, that code will take care of it. Another Hindila Bharatiya Nyaya Sanhita. Sanhita is equal to code. Adhiniyam is act. Ayakar Adhiniyam, that is income tax act. And Bharatiya Nyaya Sanhita is a new version of Indian Penal Code. What is the difference between that? Indian Penal Code, penal means punishing. The focus of the IPC is to punish the offender, while Bharatiya Nyaya Sanhita is about giving justice to the victim. The focus is different. Now, income tax last you saw lot of decriminalization has taken place. 7 years imprisonment, I will brought to 2 years, minimize பண்ணிருக்க. A lot of things have been brought out, taken out of the punishment areas and all, so that financial loss, this fiscal contraventions should not be dealt so severely so as to infringe the fundamental right of an individual. That's a separate philosophy by itself. Jurisprudence. Okay. So, international sporting event, in the cricket match, all those. This is so much of money, crores and crores of multi-crore project, but still they are not into the tax bracket because that goes in a different platform. So, international portal mainly, minimum 2 countries have to be there. It's not, that's why they have more countries coming in, participating in that, and that's lower. This prakaram paakapona, there's, you might have come across that CWG, Commonwealth Games. You would have heard about that. Well, the moment you say Commonwealth Game, the next word that will add to that is Commonwealth Game scam. How did this scam happen? I handled one matter. What is scam? Scam is SCAM. What is the long form of scam? Someone carry another's money. Okay. So how that operates is a sometime when I'll get an opportunity to talk to you on such subject, I'll explain to you in detail, because I was part of the team which was handling the matters of security scam, Harshad Mehta scam in Bombay. Then in case of stamp scam, Telgi's case, I was in the core group of investigation and I did the assessment of Telgi also. So how the whole thing operated, how such thing could happen, what are the system failures, how things developed. Sometime when I get opportunity, I can speak to you on those subjects. Not today. Okay. So any body or authority which has been established, constituted, appointed under a treaty of an agreement entered by central government by 2 or more countries, established, constituted, appointed for the purpose of profits, notified by central government. Central government will notify only such schemes which is going to benefit the country at large. Ultimately, the purpose of certification is for welfare of the country. Paisa varda, we can do more welfare activity. Okay, give them relief for that. Things will go like that. Okay. Any amount received by an individual as loan, either lump sum or installment from reverse mortgage. What is the reverse mortgage? Again, you take it and you again reverse it, mortgage. So, idhula vandu so many, if you see the financial transactions, if you go to see the financial transactions, you will find how reverse mortgage itself operates. It's a back-to-back mortgages you do. It's only a part-time arrangement, how they do it and all. So, on the aspect, whatever money you get, again, loan you are taking, but you are going to give it back. It can't be part of that, and for the services you are paying. But ultimately, the mortgage money you are taking, again, there are conditions attached to that. What are the conditions? What for you are taking the loan? That becomes very relevant. Only such things will get the benefit of that and all. These are the body trust commission, etc. At section 7 detail போட்டிருப்பான் அதை பற்றி. அது ஒரு section 7 வரைச்சே தெரியாது நமக்கு. Schedule 11 வரைச்சே. Then implementation of crude oil. Crude oil வந்தது. So some எல்லா ஆயில் எடுத்தாச்சு. எடுத்ததுக்கு அப்புறமா அது கீழே ஆயில் இருக்கும். Scrap oil. For example, I came across a case. இந்த டேங்கரில் வந்து பெட்ரோல் இருப்பாங்க இல்லையா, டேங்கர்ஸில் அங்கே போய் நிறுத்துவாங்க. நார்மலி they will fill it in the morning. மத்தியானம் இருப்ப மாட்டாங்க. Morning it is cool. And I'm just telling you some modus operandi how it operates. Morning டயத்தில் வந்து when the oil falls into the tank, it will spurt. தெரிக்கும் இல்லையா, தெரிக்கிறச்சா என்ன அந்த டேங்கருக்கு மேலே போய் ஒட்டிக்கும் அது. Then what happened? Repeat it, they'll put the dip. They'll wait, okay. Then the vehicle comes to the discharge station. Discharge station கீழே திறந்துடுறோம். திறந்த அதுக்குள்ளே அந்த ரன்னிங்கில் என்ன ஆகும்னா அந்த மேலே போய் தெரிச்சிருக்கு இல்லையா, அதெல்லாமும் வந்து அதில் செட்டில் ஆகும். For 10,000 liters you will fix up, then be about 10 to 15 liters of oil will be there like that. So these people by practice, they know that what is the amount of oil which is not recorded in the dip. அங்கே டிப் பண்ணுறது டிப் பண்ணுறதுக்கும் டிஃப்ரென்ஸ் இருக்கும். அது என்ன பண்ணுவாங்கன்னா, முதல்ல வண்டி வந்த உடனே ஒரு தனி கேனில் ஒரு 5 லிட்டர் 10 எடுத்து தனியாக வச்சுருவாங்க. That is totally because you paid only for that dip. 10,000 rupees dip இருக்குது, அதுக்கு தான் you paid. But what you have got is not 10,000, you have got 10,010. அந்த 10 லிட்டர் எக்ஸ்ட்ரா வருது இல்லையா, அதை தனியாக எடுத்து வச்சு அதை தனியாக விற்றுட்டு. These are going into separate areas, cash areas. Of course, அதான் பேசிருக்க மத்தியானம் சொல்லல, களவும் கற்று மர நமக்கும் தெரிஞ்சிருக்கணும், தெரிஞ்சு பண்ணணும். ஓகே, ஸோ எனி gratuity computed as per provisions to any widow or children depend on death of an employee. Gratuity. What is the meaning of gratuity? Gratuity comes from the word gracious. There is no binding. இப்போ நம்ம ஒரு உதாரணமாக ஒரு டு பி கிரேஷியஸ்க்கு என்ன தமிழ் வேர்டு, ஐ எம் நாட் ஏபிள் டு கெட் தட் கரெக்ட் வேர்டு. கிரேஷியஸ்க்கு என்ன வரும்னு அதுக்கு தமிழ் என்ன சொல்லுவாங்க? பெருந்தன்மைங்கிறது. ஆனால் ஃபண்ட் கேனாட் பி கால் பெருந்தன்மை ஃபண்டு. You feel out of some compassion or something you are giving that. There is no compulsion on you. But government has made gratuity act ஒன்று பண்ணி they have created how that should be. அதை சேனலைஸ் பண்ணியிருக்காது. That is there. So that is actually to compensate the family in case of distress, or in retirement you get that gratuity. Normally when a government servant retires, he gets 5 checks. One is gratuity, second is leave encashment, third வந்து இது provident fund, then death cum retirement benefit and commutation of pension. These 5 checks they will get. ஆனால் இந்த 5 செக்கில் 3 செக் தான் டேட் ஆஃப் ரிட்டையர்மெண்ட் அன்றைக்கு டிஸ்பர்ஸ் பண்ணுவாங்க, 2 செக் அடுத்த நாள் கொடுப்பாங்க. You know why? Death cum retirement benefit scheme பிரகாரம், if the amount that is to be disbursed on retirement, suppose it is X, if the death occurs before retirement, then the amount is 2x. Okay. And commutation of pension means it is taking a lump sum of the pension that you are going to draw. So your eligibility to draw pension should come first. Then only it can be commuted. When will the pension start? After your retirement. What is considered to be retirement? 5 மணிக்கு ஆஃபீஸ் விட்டப்பனா ராத்திரி 12 மணியா? It is the last day, 12 o'clock. Suppose somebody leaves office at 5 o'clock on the retirement day, and then before 12 o'clock he dies. He is considered to have died on duty. So death cum retirement benefit rules will apply as if he has died during service. That is why that check. And I am in the class, you can come and deliver it here. Okay. கிருஷ்ணன் ஒருத்தர் இருந்த ஒரு ஸ்பீக்கர், ஒரு கேபிட்டல் கெயின் மேலே பேசுவார் இல்லையா, ஒரு ஸ்பீக்கர் இஸ் தேர். அவர் புக் எழுதியிருக்கிறான், கொடுத்து அனுப்பிச்சார்னா சரி அனுப்பிச்சிருங்கன்ட்டு. என்ன சொல்லிட்டு இருந்தேன்? இது death cum retirement benefit. So what happens? If during service he gets 2x, after service and the 12 o'clock ஆனதுக்கு அப்புறம் next day suppose he dies, he won't get that twice, he will get only x. Pension also starts from the next day, that's why he will get commutation of pension also that time only. So these 2 checks are given afterwards. Why I am trying to tell you this is that for every action there is a reason behind it. In the principle வச்சிருந்தீங்கன்னா நீங்க for anything, whatever you are doing, you will ask why I am certifying this. You should know that. Then you will be able to work and your product will be, your certification will have the value for it. உங்களுக்கு வந்து 44AB sign பண்றச்சே, there are some areas where you can write, you can put disclaimer. ஒரு expenses கொடுக்குறான் voucherல he signs. So you can verify the voucher, but can you vouch that this amount has been spent for this purpose only? You cannot. So what time? That time you are allowed to give disclaimer. I came across an audit report in Tumkur. It says, first sentence, I disclaim to comment on the financial statements furnished before me in the absence of books of accounts. நான் சொன்னேன், ஏன்டா books of accounts இல்லை, then what did you audit? And when you not audit, where is the question of audit report? No, everybody is giving like this. So I said, so I referred the matter to Chartered Accountant Association. They issued him a notice. Reply, he says, similar certificates are being issued by other chartered accountant also. No, or Mysore chartered accountant certificate as attached. அதனால் சார் तू तो डूबेगा उसको भी साथ में लेके डूबेगा. நீ தான் முழுக்க போற, அவனையும் இழுத்துன்னு போய் முழுகிற. நீ அவன் பாவம் ஏதோ பண்ணிட்டு அவன் பைசா வாங்க அவன் போயிட்டு இருக்கான், அவனையும் பிடிச்சி இழுத்து இவனும் தப்பு பண்றான் பாருனாக்க. These things will work on. Then 39A is a new section. Disability pension to members of armed forces with terms and conditions. In a disability pension was not covered by the exemption. In a army personnel who are disabled during their service condition, they are given special pension apart from the regular pension. Disability pension that was getting taxed without any exemption. So that has been brought in by this 39A. Interest on compensation amount reward motor accident claim. Motor accident claim இருக்கு. Already the person has suffered loss. அவன் claim போட்டு இந்த insurance company கார கோர்ட்ல இழுத்து, and ultimately something is paid. And what is interest ultimately? Is it really an income? Interest is a compensation for the depreciation of the value of money. If suppose your inflation is 5%, the savings bank la 3% paisa vechaka, it is not giving any benefit to you. It is in fact further depreciating. What 100 rupees can buy today cannot buy same thing for which you more than 105 rupees. What is the point in they giving me interest of 3%, 3 rupees? Already there is a loss. Unless you get more than 6.5%. Fixed deposit is also of no use where the inflation is 5%. Because on that you are going to pay tax. 20% tax வச்சுக்கோங்க நீங்க. 6.5ல 20% எவ்வளோ ஆச்சு? 6.5னா 12, 13 ஆயிடுச்சு இல்லையா? 1.3 ஆயிடுச்சு இல்லையா? 1.3 போனாக்கா ஒரு 20 பைசா எக்ஸ்ட்ரா வரும் அதில். 5% anyways eaten away by the this one inflation. 1.3% goes by taxation. வரது 20 பைசா தான் உங்களுக்கு வருது ஆக்சுவலாக. You are not getting 6.5%. அந்த மாதிரி. So like that, so many finer things are there in the financial things. Okay. Then இது right to fair compensation, transfer land acquisition, rehabilitation, resettlement. This is mainly for the people, suppose they are building a dam. Water submerge agum, for that compensation is taken, compensation is given. Adula that separate act create பண்ணிட்டு அதுக்காக. So அதில் என்னென்ன வருதோ அதையும் கவர் பண்ணுற மாதிரி for individuals in HF they are given this part. Then income of an individual at HF chargeable under capital gain arising out of transfer specified as land pooling scheme of Andhra Pradesh. Because when the Amravati project வந்த போது, they land pooling. Moreover, now government what they are doing the land banks so that they can invite industries to come. When the nano project failed in Bengal, the day Tata was called to Gujarat, Modi, how much you want? 100 acres of land. I'll give you. Within a week's time, he gave him 100 acres of land. He immediately moved everything over. He started the project. Because government could do that because they had already completed the formality of creating land banks. So, அந்த மாதிரி பண்றதுல whatever compensation he gets, that is for the welfare again they are giving. And the purpose வச்சுன்னு they are given that thing for that. Any income falling under this 10, 15 வகரை இதெல்லாம் பார்த்தீங்கன்னா, that is all. What are all the old schemes which are there? எது? Government take over land. Yeah, correct. That is made into act. See, for example, even this leave encashment. Leave encashment la வந்து they have said first section சொல்றது சென்ட்ரல் கவர்மெண்ட் சர்வெண்ட்டுக்கு என்னென்ன லீவ் என்கேஷ்மெண்ட் வருதோ that is exempt. Second it says those who are not central government employees, for them, a notification will be issued keeping in line with the provisions of 1. அப்படின்னு போட்டிருக்கான். And they increased that leave encashment from 3 lakhs to 25 lakhs in 23. But notification was not issued. Limit issue பண்ணிட்டான். 25 lakhs வரைக்கும் உங்களுக்கு கிடைக்கும். But notification is not issued. When notification is not issued, under what provision you are going to do that? Like for example, cadaver kidney transplantation. Cadaver kidney transplantation law was passed by many states, but Tamil Nadu under MGR was the first government which passed the rules. Unless rules are there, how are you going to implement the act? Income tax act you pass பண்ணலாம். Oh, you have to file return பண்ணி claim பண்ண. Return format நீங்க கொடுக்கலனா எங்க இருந்து அப்ளை பண்ணுவீங்க நீங்க? So that is what has become very important aspect. So இந்த மாதிரி சில finer aspects are there. So generation or distribution of electricity or any other form of power, all those aspects, power generation பத்தி இருக்குதுல. So அதுக்கப்புறம் wherever at consolidation la வந்து they have taken care of these things. Wherever you are operating through notification, they brought into the regular act கொண்டு வந்து இது பண்ற மாதிரி. Like as you rightly said, these are the things that are happening. Exempted annual value of entire palace. This in respect to the rulers. Rulers who are erstwhile rulers and avalik enna benefit, that is continuing under this particular thing. And then last is talking about received for subsidiary company from an Indian company provided it's settling dues related to reconstruction reviewing of power generation business. இது வந்து already 80 IL இருக்கு. That part is there because that is talking about income part. As I told you, G க்கு மேல வருது. I is after G. That part is covered, brought into this area. இங்க வந்துருது. Then this is for non-residents and foreign. How the money will flow into that. I'll go a little fast onto that because I've got other things to cover. So remainder received by non-citizens, official embassy who are working here. இதெல்லாம் வந்து reading part, there is not much to explain into this part. But only thing is they have classified now. So non-residents அப்படின்னா உடனே you go to schedule 4. அதில் கவர் ஆகுதான்னு பார்த்து இது பண்ணணும். That's what is the thing over there. Then எல்லா non-resident payments and all, that's what is taken care of here. Even 13A, 13B, 13C are newly brought in. That was not there in 2025 Act. Beginning la varala, in the version introduced பண்ணிருக்கா. 2026 la they have introduced these 3. That 113A, providing capital goods, equipment and tooling contract, manufacture, use of electronic manufacturing in India. And now we are to go into this wafer, என்ன சொல்லுவாங்க அதுக்கு, what is technology, ஒரு wafer chips. Integrated is integrated, but chips manufacturing இல்லையா, that is in fact that is one main reason why we want to take Aksai Chin. In Aksai Chin la வந்து glaciers are there which has been given to China. அந்த glacier இருந்து வர வாட்டர் வந்து பியூரா இருக்கு, unadulterated water that is useful for manufacturing of chips. That is one reason we want to take it, but China does not want to give at that because they are having water from that drawn over there. Idella lot of, if you go to the global things, different things will come out of that. Okay. Same related to this one. இது வந்து 11 items. Income of certain eligible persons including investment fund, business trust and unit holders. Investment funds la வந்து mainly to protect the investors and those funds which are used for the development of the country. Any income other than income chargeable under the head profits and gains of an investment fund. Investment fund வேற என்ன வரும்? Interest தான் வரும். Interest வரலாம், capital gain வரலாம், all those things. That is, but business and profession is not included in that. To unit holder, any income referred to in 224, accruing, arising or received being proportionate income which is in the same nature of income chargeable under the head this to a unit holder of the investment fund. That is for the people to invest in those units அவளுக்கு because to encourage people to make investment in such areas. Business trust, real estate investment trust, these are the various trusts which are created. அவளுக்கு that income gets taxed in that. Venture capital, again venture capital venture capital fund இருக்கும், venture capital company இருக்கும், then venture capital undertaking இருக்கும். These three entities are there. That is all taken care of. இதில் investment made specified persons into India, alternate fund. I will go fast on to this. Not much. Venture capital undertaking. இது வந்து international financial service centers. International service centerல என்னென்ன போகிறதுன்னு, that is where IFSC. இதுவும் I will skip through this part, not going depth into, because I want to move to deductions first. Anyone? Okay, thank you. Persons exempt. Regimental fund. Regimental fund is, army have the regimental fund for the welfare of the people, that is taken. Non-public fund established by the armed forces only for the benefit of the regiments. Then welfare of employees and dependents, whatever funds are being created for that, they all are called welfare ARP. Any fund set up by LIC under pension scheme, Khadi village board, whatever fund it is created, it is there. Administration of any or more public, religious or charitable trusts or endowment, including Gurudwara, temple organized under funds, they are going for charity purposes. They may get exempted here. This is different from non-profit organizations. That is dealt separately. Okay. Then Colombo Declaration, IRDA, Insurance Regulatory Authority, their income is not taxable because the regulatory authority, it is not making any profit, only regulating the thing. In fact, you would have heard the name FERA. FERA became FEMA. Why? Have you ever thought? What is the difference between FERA and FEMA? This happened in 1999. Foreign Exchange Regulation Act became Foreign Exchange Management Act. That means there was no restriction, but it was managing. அதில் என்ன பண்ணான்னா, many of the powers of the officers were withdrawn. Their power to arrest was withdrawn. In fact, at the title there was a training program for them. I was asked to take the first session because the people were used to using that power of arrest. Suddenly you cannot arrest அப்படின்னு சொன்னாக்க அவங்களுக்கு ஒன்றுமே பவரே இல்லை மாதிரி தோன்றது. They feel fish out of water. How can I function without power of arrest? So they said better give them a training through income tax department who are functioning more effectively without power of arrest. How? And when I conducted the first session. In fact, Bajpai was the director. He was not Atal Bihari. One more Bajpai. He was telling Sridhar, I got a flight to catch. I told sir, can you sit for 10 minutes? அதுக்கப்புறம் நீங்க போங்க அப்படின்னு. சரினார். But he sat through the entire session. And he said, these are new dimensions you are given to the people and how their mental frame is to be changed as to how they can function without power of arrest. எங்கே ஓடி போவோம்? இன்கம் டேக்ஸ் எங்கே ஓடி போவோம்? ஒரு பழைய பாட்டு ஒன்று ஞாபகம் வருது எனக்கு. அஜி ரூட் கர் அப் கஹாं जाइएगा जहां जाइएगा हमें पाइएगा. எங்கே போனாலும் நான் இருக்க போகிறேன், நான் எங்கே போகிறேன், இன்கம் டேக்ஸ் இருக்க எல்லா இடத்துலையும் எங்கேயும் தப்பிச்சுன்னு ஓட முடியாது உங்களால். தட் இஸ் இட். ஓகே. எனிவே, these are various funds, Prime Minister's Relief Fund, all those aspects are covered here. இல்லை any university education annual receipt does not exceed 5 crores, that is taken care of. And நம்ம 1023 இருந்தது இல்லையா, அதுக்கு கரஸ்பாண்டிங்க எக்ஸாம்ஷனில் கொண்டு வந்திருக்கோம். All 23 whatever aspects were there, all those things are brought here because they are not actually NPOs னு வராது, they are specific bodies which are there for the various aspects of the society. APMs வருது, established central or state tax for members of SC, ST and backward class அவளுக்கு டெவலப்மெண்ட்காக. Cooperative societies, coffee board, rubber board established under this, and the board's income, whatever they are getting income out of it is exempt from that. Spice Board, any authority board, credit guarantee board, infrastructure fund. All these aspects are the welfare things under the various heads that is all getting exempt over there. And new development bank, it is introduced, the conditions are yet to be prescribed. Even though that amendment has been brought now in 2026, that conditions are to be prescribed still. That covers this schedule. Then political trust. 13A, which was there 13A. Any income of political party which is chargeable under the head income from house property, income from other sources, capital gain, or any other voluntary contribution received from any person who is a political party registered under this. From one political party to another political party, keeps or maintains such books of accounts or other documents would be enable AO to properly deduce the income there. Books of account வச்சிருக்கணும், audit பண்ணணும், produce பண்ணணும். நான் பண்ண மாட்டேன் அப்படின்னு சொல்லிட்டு இருந்தானே, பண்ணாதே, டேக்ஸ் கட்டு. என்னை பொறுத்த வரைக்கும் நான் யாரு? கயாக்கா பண்டா. ஓகே. In respect of such voluntary contribution, other than contribution by way of electoral bond in excess of 20,000, keeps record, maintains all those things. Maintain பண்ணா தான் அவனுக்கு பெனிஃபிட் கிடைக்கும், இல்லைன்னா otherwise he will not get the benefit. Many political parties are facing that trouble. நான் தான் கவர்மெண்ட், நான் என்ன பண்ண என்ன பண்ணுவேன் அப்படிங்கிற மாதிரி ஒரு ஆட்டிடியூட் வந்துருக்கு இல்லையா? That will not work. Because income tax independent. அவன் சும்மா நோட்டீஸ் அனுப்பிச்சிடுவான், டிமாண்ட் அனுப்பிச்சுட்டு இருப்பான். பண்ணலையா பேங்க் அக்கௌண்ட் அட்டாச் பண்ணிட்டு போயிட்டு இருப்பான். நீ என்ன வேணா பண்ணிட்டு இருக்க. That's so voluntary contributions received by this distributed political parties, okay, same rules will follow in that. Electoral bond was a new concept that was brought in a few years back. It is only to make transparent. ஏன்னா people want money. எலெக்ஷனுக்கு போகணுன்னா பைசா செலவு பண்ணணும். பைசா எங்கேருந்து வரும்? You have to do contribution. அவன் tax pay பண்ணிட்டு கொடுக்கணும். So electoral bond can be sold by bank, so that it's the white money that is being spent and they are getting the bond, they are distributing. அதில் என்ன immunity na? The person who can buy the bond through his accounted money, he can give any bond to anybody that they need not disclose from where the money has come. They go to say, well, so many bonds I have received, because that is already taken care of, because the source of that fund is already disclosed the source. That is not a problem. You have only disclosed from bonds vandirukku, declare panna porum. So the trail is there always. So இப்போ 12 items have been moved from exemption area to sections. என்னென்ன பேருக்கு? Pension, leave salary, retrenchment compensation and VRS compensation. They have all gone to section 19. Out of the exempt area section 11 தான், 19ல போயிடுது. அப்புறம் special provision for special economic zone 144. Second, grandfathered only. What is the meaning of grandfathering? பெரியவா இங்கே ஒன்றும் பண்ண வேண்டாம், இருங்கோ. You may not contribute anything positively, but because you have been lived so many, you continue to live here அப்படின்னு. So they are just kept there, part of it. Grandfathered means that is there, or benefit which was given will continue to exist. Just because act has changed, they will not be deprived. Whatever had been granted will continue. That is, no further thing will come to them. But they will be allowed to live as long as they want to live. No problem. That is called grandfathering. அப்புறம் income from property held by charitable trust will be covered under this 333. அந்த ஏரியாஸ் வந்துடுது. It is taken out to special assessment area. NPOs. அது அங்கே போயிடுது. Procedure for registration is cancelled. ஏன்னா இப்போ only one registration. இருக்கிற registration will continue, grandfathered. But other will be, have to do only one registration, that will be taken, they separately dealt with in all. Okay. Then omitted sections. என்னென்ன செக்ஷன் omit ஆயிருக்கு? Income and interest on savings of certificate issued before 1/6/2002. Interest on rupee dominated bonds. Income foreign government employees under cooperative technical assistance. All those things which were there, these are the various sections, these have been omitted. 1150 is omitted because it has got no longer valid, redundant. Whatever is redundant, you are already bringing tax, dividend you are taxing it, so no point under it. So all the sunset clause, now over a period, just like 80 HHC was made a sunset clause, 5 வருஷமா withdraw பண்ணா, but it still remained in the act. That is all removed. Cleaning up, spring cleaning has taken place. So 24 items have been removed from here. Long-term capital in case of share, all these aspects, merger of charitable trusts and institutions, all these things have been removed. That is the point. In the 24 items இருக்குங்க இதில் பேருக்கு. Now we move to the deduction area. இதில் என்ன பண்ணிருக்காங்கன்னா what they have done is that certain basic eligibility why they have done that I have carved out. In computing total income there shall be allowed from his gross total income அப்படிங்கிறத what they reframed it. While computing total income, a deduction shall be allowed from gross total income. So, while computing total income, often SSC அது எடுத்துட்டான், deduction shall be allowed at gross total income. Simpler modern wording. அடுத்தது gross total income conditions. From gross total income, subject to provisions of this chapter. அப்படிங்கிறது போல in accordance with the provisions of this chapter. நட்ட ஒன்றும் வேர்டில் ஒன்றும் மற்றபடி சேஞ்ச் இல்லை, நம்மளும் பண்டித்தில் அவனும் பண்டித்தில் ஏதோ கொஞ்சம் பண்ணி போயிட்டு இருக்காங்க. ஸோ ரெடியூஸ்டு வெர்போசிட்டி, ரெஸ்ட்ரிக்டட் ஆன் டிடக்ஷன்ஸ், நாட் எக்ஸீடிங் கிராஸ் டோட்டல் இன்கம், ஷெல் நாட் எக்ஸீட் கிராஸ் டோட்டல் இன்கம். இந்த மாதிரி ஒரு வேர்டிங் ஃப்ரேசிங் மேலே பண்ணிட்டாக்க ஏதோ புதுசு மாதிரி தொடச்ச மாதிரி இருக்கு, அதே ஓல்டு வைன் நியூ பாட்டில் தான் அது. ஓகே, தென் ஃப்ரீக்வன்ஸ் கிராஸ் ரெஃபரன்சிங். இதுலேயும் இருக்குது cross referencing. I don't say cross referencing is not there, it is there, but considerably it has been reduced. So minimal cross referencing is there to make improve the readability of it. Multiple provisions and explanations have been done away with. Provision explanation subsume பண்ணிட்டாங்க. What they have done, whatever you explain, you brought it into the act itself. Provision அதுக்குள்ளே கொண்டு வந்துட்டாங்க. So the wordings of the act has increased by subsuming all those things. அந்த மாதிரி, that is how they made it a cleaner structure. Investment deductions வந்து any sum paid or deposited shall be allowed deductionக்கு பதிலாக amount paid or invested in specific instrument shall qualify deduction in plain language they have put it. Medical insurance, premium paid in accordance with the schemes framed. அதுக்கு பதிலாக insurance premium paid for the health coverage, அதுதான் specified. So that is simplified the phrasing. எங்கெல்லாம் குறைக்க முடியுமோ அங்கே குறைச்சிருக்காங்க. அப்படியே நமக்கு புரியலைனாக்கா அது வந்து நிஜமாவே புரியலையா அல்ல எனக்கு புரிய வேண்டாமா, அது யூ ஹேவ் டு சீ இன்டு தட். ஓகே, இன்ட்ரெஸ்ட் பெய்ட் அவுட் ஆஃப் சார்ஜபிள் டு டேக்ஸ் ஆர் இன்ட்ரெஸ்ட் பெய்ட் ஆன் லோன் ஃபார் ஹையர் எஜுகேஷன் ஷெல் பி அலோட் பிகாஸ் யூ டாக்கிங் அபவுட் லோன் எஜுகேஷன் ஸ்டேட். அது மாதிரி வேரியஸ் பெட்டர் ஆர்கனைசேஷன் செக்டர்ஸ் எல்லாம் பண்ணி like that concise wording பண்ணி wait for that I given a small when you have you will be sharing that this thing with you. அப்புறம் செக்ஷன்ஸ் ரீநம்பர் அப்படி ஆயிருக்கு. 80 AB 112 ஆயிடுது சிங்கிள். தென் சிசிடிலாம் கிளப் பண்ணிட்டான், ஒன் செக்ஷனை கொண்டு வந்துட்டு. தென் நம்பரிங் 80 CCH continues, that is Agniveer scheme. Medical insurance no change, disability dependent same, specified same, housing split clearly. Electric vehicle continue, EEB is continuing, donation ATG same, ella same. This infrastructure, all those aspects are consolidated into 138 to 143. Like that they have brought all the things into that. Disability self same, everything. எப்படி கொண்டு வந்திருக்காங்க ஒன்றுங்கிறதுக்காக ஒரு சின்ன சார்ட் அது. ஓகே, நான் இதில் என்ன பண்ணிருக்கேன்னா 80 what are the subsections, under what section it has gone. 122 122 to 154, that is the section which is dealing with this part. Okay, 33 sections 22 54 வரைக்கும். So deduction of life insurance premium, deferred conditions as to the provident fund, contribution to provident fund, schedule 15 வந்துருது. schedule 15ல வந்து they talk about what are the various funds, அது எப்படி போகணும், அது செப்பரேட்டாக போகிறது. that will talk about exemption part, it's talking about how that provident fund will operate, அது மேலே இருக்காது that particular schedule. Deduction of employer's contribution to pension scheme of the government, that is available there. Deduction in respect of Agnipath scheme, that is there, Agniveer whatever you call it. Health insurance premium 126, அது சேம் அங்கே டி போட்டிருக்க மாதிரி டிடி அதெல்லாம் போயிருக்கு. டாக்டர் டி ஃபார் டாக்டர், மெடிக்கல் ரிலேட்டட். into medical insurance, personal disability. அப்புறம் E for education, loan taken for interest residential house taken, அது அங்கே இருந்தது இல்லையா முதல்ல 80 தான், it was there. principal repayment. That is taken care of here. Then interest on loan for certain house properties. Deduction of purchase of electric vehicle. மேலேயும் இருக்கு, இது மேலே இல்லை. அங்கே எங்கே பார்த்தோம் நம்ம எலக்ட்ரிக்கல் வெஹிக்கிள் முன்னாடி பார்த்தோமா? இது அதே தானே, சேம் திங் ஐ எம் சீயிங் அகைன் ஐ திங்க். ஓகே, 80G டொனேஷன்ஸ் இதெல்லாம் இதில் எடுத்துன்னு போயிட்டாங்க, செக்ஷனில் எடுத்துன்னு போயிட்டாங்க. நாட் 333 அதில் போயிருக்கு. தென் டிடக்ஷன்ஸ் ஃபார் ரெண்ட் பெய்டு subject to everything subject to conditions. Donation to specific research, contribution. இது பற்றி பேசுறச்சு, 80G பற்றி பேசுறச்சு, I remembered one incident. One of my colleagues, he was transferred to Pune. புனேல வந்து அவரோட ஒய்ஃபோட பிரதர் இருந்தான். நார்மலி என்ன பண்ணுவான், எங்கே ட்ரான்ஸ்ஃபர் ஆச்சுன்னா முதல்ல ரிலேட்டிவ் வீட்டில் போயிருப்போம் 2 நாள். அங்கே போன உடனே அவன் தான் அத்திம்பேர் வாங்க அத்திம்பேர் ஒரு சின்ன வேலை இருக்குது இன்கம் டேக்ஸில்ண்ணா. என்னன்னா, நான் ஒரு ஐயப்பா கோயில் கட்டின்னு இருக்கேன், அதுக்கு டொனேஷன் வாங்க போனால் 80G வேணும் அப்படின்னு. ஐயப்பா டெம்பிள் கட்டுறதுக்கு எங்கேருந்து இப்போ 80G கிடைக்கும்னா எனக்கு தெரியாது. ஆனால் என்ன சொல்லுவாங்க ஹிந்தியில், என்ன சொல்லுவாங்கன்னா, சாரி குதாய் ஏக் தரப் ஜோரு கோ பாய் ஏக் தரப். மச்சாங்க அவன் ஒரு பக்கம்னாக்கா அவன் என்ன பொண்டாட்டி அவன் தான் அக்காவை குத்தி விட்டான்னா அவன் நம்ம லைஃப் மிசரபிள் ஆகிடும். அதில் யூ டு டேக் கேர் ஆஃப் யுவர் பிரதர் இன் லா ஃபர்ஸ்ட். ஓகே, so he went to the commissioner. I told him, sir, one small work. What is that? Sir, 80G. For what na? Ayyappa temple. How can I give Ayyappa temple? I know, sir, but he is my brother-in-law, sir. You will also do it for your brother-in-law, sir. Nana. அதெல்லாம் பண்ணுறது இல்லைனா கொடுக்க முடியாதுன்றனா. உன்னை ஏன்னா என் பொண்டாட்டிக்கு தம்பிலாம் கிடையாது, அதனால் நான் கொடுக்க மாட்டேன்னா என்ன பண்ணுறது. வீட்டுக்கு வந்துட்டு சாயங்காலம் உக்காண்டுதுனா அவன் வந்தானா, என்ன அத்திமாரி எப்படி இருக்கேள் நானா, என்ன பதில் சொல்கிறதுலே தெரியல. என்ன 80G என்னாச்சு நானா, இல்லை கமிஷனர் இல்லைன்னு சொல்லணும். பரவாயில்ல, எப்படி மேனேஜ் பண்ணேன் பண்ணிவிட்டேன், நீங்கள் கால் பண்ணாதீங்க, வேண்டாம் 80G வேண்டாம் எனக்கு. நான் அப்படியா, என்ன பண்ண நீ? நத்திங். I went to one fellow, I asked him, I want donation for building Ayyappa temple. He asked me, do you have 80G? I asked him, if I have 80G, how much will you give? I'll give you 5,000 rupees. Very good. Give me 4,500. அப்போ இது என்னடா இது, என்ன கணக்கு இதுன்னா சொன்னா, if you give me 5,000, you will get 80G 50%, 2,500. 2,500, suppose you are in 20% bracket. How much tax you will save? 500 rupees. TDS. 5,000 500 rupees cut பண்ணிடு, 4,500 கொடுத்துரு. அவன் சொன்னான், இவ்வளோ யோசிக்கவே இல்லை, என்ன இத்தனை வருஷம் டிபார்ட்மெண்ட் என்ன கொப்பை கொட்டின்னு இருந்தேன் நான், எனக்கு தெரியல, பாருங்க எவ்வளோ ஐடியா பண்ணுறேன். எவ்ரிபடி திங்ஸ் இன் a different footing. இந்த மாதிரி. ஓகே, ஸோ டிடக்ஷன் இன் சர்டன் இன்கம்ஸ். 80IA டிடக்ஷன் இன் ரெஸ்பெக்ட் ஆஃப் ப்ராஃபிட்ஸ் அண்ட் கெயின்ஸ் இன்ஃப்ராஸ்ட்ரக்சர் டெவலப்மெண்ட் ஆஃப் ஸ்பெஷல். இது வந்து 80IA. ஆல் தீஸ் ஆஸ்பெக்ட்ஸ் எந்தெந்த ஏரியாஸ் இருக்கோ, collecting biodegradable, all those things are taken care of here. Then additional employees cost, all same, all the sections which are existing, cooperative societies also there, all these things they are brought here, but certain things have been removed. What is removed, I will come to that little later. Okay. Omitted. What is omitted? 80CCA is omitted. CCB, CCE, CCF, CCG, HH, HHA, all these things have gone in this section. It is 22 items have been removed from deductions. Okay. There are the various items which have been removed. So it becomes for easy reference. எது போயிடுத்துங்கிறது நீங்கள் பழைய ஆக்டில் கிராஸ் பண்ணிக்கலாம் till that time. Okay. RRA அதெல்லாம் all those have gone. That's all. So with this 3 மணி ஆறுது, ஒரு 5 நிமிஷம் தான் இருக்குது. இதான கேள்வி ஒன்றா கேட்கலாம். வாட் எவர் லிட்டில் ஐ கேன் ஆன்சர் ஃப்ரம் மை எக்ஸ்பீரியன்ஸ், ஐ வில் ட்ரை டு கீப் யூ. நெக்ஸ்ட் ஸ்பீக்கர் வந்தாச்சாம்மா, வந்துட்டாங்களா? ஓகே, குட். உங்களுக்கு ஒரு 5 minutes பிரேக் ஒன்று எடுத்துக்கலாம். வந்துட்டிங்களா மேடம்? வாங்க 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 வாங்க. அதான். Anyway, thank you very much. I write poetries in Hindi. I can translate it to English for you. 2 small poetries I will tell you. One poetry is that ஹிந்தியில் சொல்லிட்டு உங்களுக்கு நான் இங்கிலீஷில் ட்ரான்ஸ்லேட் பண்ணுறேன். दुनिया को रोशन करना एक दीपक की बस की बात नहीं. It is not within the capacity of a lamp to illuminate the whole world. दुनिया को रोशन करना एक दीपक की बस की बात नहीं, लेकिन अंधेरे को राही को अगला कदम दिखाना दीपक की बस की बात है. But it is possible for a lamp to show way to a traveler in total darkness. सूरज बनना शायद मेरी बस की बात नहीं. Probably it is not within my capacity to become sun. Leaping. सूरज बनना शायद मेरी बस की बात नहीं. लेकिन दीपक बनना हर एक की बस की बात है. To become lamp, it is within everybody's capacity. दीपक बनने की कोशिश करो. Try to be a lamp so that you can lead life to the people in darkness. That is one. And second small poem is about हर बीज से पौधा नहीं उगता. Every seed does not germinate into a plant. लेकिन हर पौधा एक बीज से ही उगता. But every plant germinates from a seed. हर कोशिश कामयाबी में नहीं बनती. Every effort does not result into success. लेकिन हर कामयाबी एक कोशिश से ही शुरू होती है. Every success starts with an effort. बीज ऐसे बो कि हर बीज से निकले पेड़. Sow a seed in such a manner that every seed becomes a tree. कोशिश ऐसे करो कि हर कोशिश से मिले कामयाबी. Do an effort in such a manner that every effort becomes success. Thank you.
Professions learn taxation in the practical way. On behalf of the organizer and all the participants, I extend a heartfelt thanks to you, sir, for sharing your valuable knowledge with us. Thank you once again, sir. A big round for applause, please. I may now request CAM Bhimabad, past chairman SIRC, to kindly present memento to CA Subashini ma'am as a token of her gratitude and appreciation. And I also welcome CA Subashini ma'am, please, to the dais, please. It's our privilege to have with us CA Subashini Ganpati ma'am, founder partner of Subashini and Associates LLP, with a rich experience in taxation, consulting, due diligence and forensic audit. Ma'am is also a faculty for ICI, Income Tax Officer and GST Officer, and is well known for her knowledge sharing initiatives through seminars, television discussion and public awareness program. Ma'am is also actively creating tax awareness through her YouTube videos, which has crossed 5 lakh views. Along with being a successful profession, she is also a national player, classical dancer, orator, and lyricist. We are delighted to have you, ma'am. On behalf of the organization and all participants, I warmly welcome you and request you to kindly take over the session.
Very good afternoon, ladies and gentlemen. So I first of all place on record my sincere thanks for this wonderful opportunity of addressing this learner gatherings. I see a lot of senior members, so it gives me immense pleasure to be here to talk on the transitional provisions of the income tax. I sincerely thank the chairman SIRC for this opportunity again. So on this transition again, talking about Income Tax Act 2025, of course, like senior members here would have seen this direct tax code, which was about to come in, and then it was completely washed off. Then the proposed Income Tax Act 2025 was brought in, and there were a lot of consulting, etc., recommendations which went into the government. Then suddenly, one day they said no, we are not going to do anything on this. Then it was, it just came like a bomb and it was introduced. Now, the question on why do we even need a new act. All these provisos, explanations, etc. Now all is like consolidated into one. Now, if we just copy paste this section into a chat GPT or, Gemini AI, it will give us a very consolidated tabular wise sections. So for this, like, we will have to do a entire homework of reading through the entire act, and all of us are like anxious as to, are we missing something? Is there a change that we are missing? What has changed? With all this good news of the section numbers reduced, chapters reduced, words reduced, size reduced, all these are, yes, good to know, good to hear. But having said that, like, are we really missing something in terms of nuances, in terms of nitty-gritties? Because like the Income Tax Act per se, when we read the sections, for example, like income from other sources, until I read the amendment and the reason for this amendment in income from other sources, the relative definition, I never had an interpretation of this maternal paternal. So we all assumed relative includes maternal and paternal. So then, like, is there a nuance like this? Were there litigations like this? Now it's like we have to. So we are all like anxious as to, where are we missing? Are we missing something? On one side, yes, we are having comfort on it is only the section numbers and the linguistic changes notwithstanding, irrespective of, and all that. On the other hand, the nuances, nitty-gritties, what kind of interpretations people might take in terms of the language, shall, may, we all know like how smallest words or like things can create litigations. So having said that, given the changes in all the other heads of income, etc., I think transition has a good content to talk on. So transition, of course, like the latest ever transition that we underwent was in the indirect taxes regime, where we, all the other indirect taxes were subsumed and GST came in. Now, when GST came in, all our concerns was what will happen to the credit. How are we going to account the sales? How will these returns happen? Now, this site is not up and running. So, prior to GST introduction, we all had this beautiful, the vision of, you file 1, then it will get reflected in your 2A, then you file 3B, then your credit is there. You file Tran 1, your credit comes and reflects. All this theory was wonderful to listen. And we all felt like it'll all be a cakewalk. But when we actually stood on July 1st, filing the July returns, then we understood like first 3 months returns, what happens. Then you hold on till the site is ready. And like the 2B did not reflect. Reverse charge mechanism. Tran credit issues, I am sure like we are even facing it today. The exemption notifications, the relaxations, etc. So how is this transition going to happen in Income Tax Act? Nothing to worry. No confusions like GST. The transition is really going to be very, very smooth, with the only challenge that, if all of us here in this hall think that it is only the section number change, we'll have to just remap, okay, now this is like section this, mapping to this section. Now it is fine. Like I'm comfortable with the act, basically because it's only a simplification of the language and subsuming the explanations, provisos, etc. The answer is a big no. We will have to do a parallel run of both the acts. So this parallel running of both the acts from the department angle or from the operational angle, yes, it is going to be a smooth transition because there is no confusion between what happened there and what is going to happen here and how this bridge is going to happen. Absolutely not a problem. It is just two horses running parallelly. So this particular year, and the income tax site is also well equipped to handle both the acts together parallelly, both the 1961 and the 2025 Act. All the forms which Sir was mentioning, like the old Act and the new Act, are operational, up and running. So you can parallelly do your transition. But if we can for a moment think that we can forget the old Act, just map the new section numbers and sit back, the answer is a big no. We'll have to remember the old Act and the new Act and do a parallel run for the smooth transition. I'll tell you like why. Now, this is a summary of slide. Okay, slide change. So this, I'm sure like you would have heard in all the sections. Now this has almost become a cliche now. The section numbers, the words reduced, etc. So this is definitely like reduction of the words and content. For example, like income from other sources, it says like A to E. Now it says A to D. Now what went missing? So it was only a income from securities which was, taken away in 1988 and 1998 is now not there. We didn't even know, we didn't even think about something of that income from securities being grouped under income from other sources. At least like my generation, whatever we learnt only the 4 heads of income. If it does not belong, then it comes to income from other sources. So those kinds of changes and like the sections clauses which are completely not relevant are removed. And of course, like it's a smaller act, but doesn't mean we can forget the bigger act. We have to remember both. So all of you are suddenly like getting very sad that I said that we have to remember both. We have no choice. So this past actions remain valid. So this is like section 536(2). I'm moving on to 536(1) says just to ensure smooth transition. Now this section is introduced. There is a smooth transition. 536(2) has 22 clauses where they have thoughtfully brought in all the possible transition glitches which could come in with the introduction of the new Income Tax Act. And they have carefully said that in case if we had missed out something in this act, then we refer to the General Clauses Act, which will cover everything that, whatever good, bad, ugly you had in this old act will continue as the same good, bad, ugly in the new act. And whatever is going to start in this new act will continue in this new act, and we will do a parallel running. There is no benefit to you or to the government by virtue of introduction of this Income Tax Act. We cannot really when there is a confusion, then everybody tries to get benefit out of it. For this particular Income Tax Act, there is no such scope at all. They've made it very, very clear, except for 148, which I will take it up a little later. So this is the first clause which says anything which is done in the erstwhile law remains valid. So there is no changes. If there is a demand which is given to you in the old act, it is valid. So this per se, like the transition, the bifurcation would be like in 2-3 buckets if we can group it to. The first one is the legal validity or the sanctity of the orders passed erstwhile. Then the second limb would be the procedures and the forms, documents, etc. The third one is the carry forward losses. The last one, the 22nd one is pertaining to the search, the raids action. So these are the transitional provisions, the clauses, the 22 clauses pertaining to the transition. The second one says like if there is any benefit or any benefit tax demand exemption, like what sir was telling, ATG, whether you decide to get it from the department or you take it yourself, whatever you did in 1961, you can continue to do in 2025 also. There is no change. So your rights are not deprived of. You still can hold all the exemptions valid. Just like our, trust, which was NGO, which underwent a sea change from 2020. So they said like you have to come and do a new registration. Then the dates were extended. Then they said like you have to go to CBDT for exemption. Now the power has actually come into the commissioner's hands for exemption, because like recent past, all the cases in ITAT were only pertaining to the exemptions. Smaller challenges in terms of the forms change or like clauses change, 2 days delay, 12 days delay, all these things are now streamlined. So slowly, like even this transition. So in this transition does not create any fresh confusion. It says if you were enjoying something in the old act, you will continue to enjoy the same in the new act. There is absolutely no change. So the legal validity continues. Pending and future proceedings for pre-2026 and the old act. So if there is an appeal which is pending before the Commissioner Appeals, what will happen to that appeal? 2025 Act. Just imagine for a moment that we had something very, very beneficial in the 2025 Act. Then this confusion should actually come. So per se, we don't have any big relief or otherwise in the 2025 Act. The Act remains. But for the proceedings in front of the probably like in the CIT appeals or ITAT, etc., prior to 1/4/2026, we will have to refer to the old Act. All the proceedings will happen according to like 1961 Act only. So 2025 Act does not apply there. What happens if like, in 2028, there is a remand report from ITAT to the AO pertaining to assessment year 24-25. Under which Act will this be governed? Which Act will the assessment happen? 61 only. So in case if you're representing before the assessing officer again, after this maybe a interpretational issue or transitional issue, amalgamation, TDS credit, whatever, you have to refer to the old Act. Make all your written representation as per Income Tax Act 1961. And your order will also come as per the Income Tax Act 1961 only. Now, if there is a notice issued post April 26, after the introduction of the new Act pertaining to financial year 24-25, then which Act will govern this? 1961 only. So, only from the tax year 26-27, the new Act will come into play. Any notices, whether issued prior to, pending in front of any authority, or like issued after the introduction of the new Act, everything will be governed as per the old Act only. Now, how do we read this notice? So, it will say tax year 24-25. Which year does this pertain to? Assessment year. Financial year. So, we have to forget this concept of assessment year. This is the only thing in the entire Act which we can completely forget, remove it from our mind, because that is not going to be relevant anymore. So, your assessment year concept will not be relevant in the notices which are given further or in terms of the proceedings which are happening from now on. It will all be tax year reference only. So, the further notices which are going to come to you will come in tax year. So, we will read it as financial year only. Assessment year concept is completely removed. And this, of course, includes the notices, assessments, reassessments, rectification, penalties, appeals, revisions, etc. Now that like both the assessments and penalties are like brought into one bucket, we still have pending penalties which are to be initiated. And we also have certain penalties which are not in the pipeline now, not anticipated, might come maybe when after 20 years, 30 years, 271D, etc. Those kind of penalties has no time limit. So, it can come anytime. So, those penalties pertaining to the tax year 25-26 until then will continue to be governed under the old Act. So, the old Act, though repealed, will have its survival. It will never die. It's not even in the ICU. Penalties for old Act will continue. So, anything just as per the assessments, whatever assessment has happened or like is likely to happen prior to 1st April 2026, pertaining to the period prior to 1st April 2026, will continue to be governed under the old Act only. So, 1961 Act only. So, simultaneously, the penalties also will be governed as per the old law only. Appeals and court matters continue unchanged. So, if there is any appeal, writ petition, reference or litigation which is pending before any authority, all these things pertaining prior to 1st April 2026 will continue to be governed by Income Tax Act 1961. So, there is no change in the assessment proceedings or anything, any matter pending before any authority prior to 1st April 2026. Any matters which are initiated after 1st April 2026 pertaining to the tax year 26-27, only those will be governed by the new Act 2025. existing options, elections and carry forward. Say suppose like I opted for the new regime. I enjoy certain exemptions. Maybe I have a carry forward. Again, like those things are covered separately under different clauses of this section. But I'm just giving you a broad overview. So in case if I have opted for something, then they are not asking me to file a new Tran 1. They are saying it's a smooth transition. Whatever you had to your credit, however rich or poor you were, by virtue of any income tax credit or demand notice or recovery, etc., until 1st April 2026, you will continue in the same status. So nothing changes pertaining to the 1961 Act. Whatever you enjoyed, whatever you were deprived of, you will continue in the same status, and the new act, or probably like it will be still governed by the old act only. And the good part here is, I would appreciate that they are not asking us to do any extra filing. So for example, carry forward loss. Just imagine a scenario like if they say if your carry forward loss pertaining to this, until this year, in this to carry forward this in the next year, maybe for the tax year 26-27 when we are filing the returns in 28, you have to file one more form. And that form, imagine if it is introduced in the last moment, you have some technical glitches, then there will be an officer who is sitting to verify whether the carry forward losses are valid or otherwise. So until now, it was all a straight through process. Unless there is a scrutiny or a assessment or a search done, nobody has actually examined your losses, whether it is valid, invalid, all that. So we've been enjoying this through a straight through process. I'm not advocating any tax evasion here, but I'm just saying like all this went through a straight through process. Similar to Tran 1, what happens if an officer is going to come and sit and examine whether your loss is valid? So why did you incur this loss? And we all know like how assessments can happen. Sir can excuse me. We all belong to the other side of the bench.
You are very much on the same. I'm telling you, you are technical officer supporting, helping the department.
Okay.
Don't think for another.
Thank you, sir. So that way, like we all know like how assessments happen. So that risk they are giving us complete immunity on. So whatever you are enjoying, there will be a smooth transition. Just like how we file our ITR, the carry forward losses are getting auto-populated. It should get auto-populated in the new ITRs also. So that way there is no extra hassle of filing any extra forms to either like enjoy any exemptions, reductions, options which we had chosen in 1961, or like to do the transition. It is all seamless transition. That way the transition is completely seamless. Whatever they promised, the government promised, is actually like happening on ground. The best part, again, giving credit to the income tax, the information technology aspect of the income tax, it supports a parallel run of both the acts. So that way. Interest and refunds. So when I told like all the assessments pertaining to the years prior to 1/4/2026 will be governed by 1961. Collections governed by 1961. Whatever matters pending before any authority appeals to ITAT, to Supreme Court, High Court, wherever, governed by the old act. But if there is a refund which is due, which becomes due after the introduction of the new act, or if there is a demand which is collectible, proceedings as per the old act only. The collections, the demand actually becomes due. The proceedings conclude after this introduction of this new act. The interest on that alone. So interest here also, I think the government has been very, very fair two-way. Otherwise, generally the government will be very careful in collecting and not paying. Here it is either the refunds or the demands. Both ways they've said it will be governed by the 2025 Act. Withdrawal of earlier withdrawal of earlier deductions and exemptions continue. In case if you have any exemptions, deductions which you were enjoying. So I just said like all your deductions, exemptions, options, whatever you were enjoying prior to the introduction of the new act continues seamlessly, all that is fine. But in case if you violate any of those conditions, which were, which you enjoyed prior to the introduction of the Income Tax Act 2025, then those violations, etc., will be treated as per the violation under 1961 only, but in the new act. For example, like if I have a, say like capital gain exemption, which I've availed prior to the introduction of this act, and maybe like I'm not supposed to sell a particular property for 3 years, and I'm selling this property in the tax year 26-27, where my 3-year time limit is not expired. So then that case, this will become my income of this particular tax year according to the new act. Corresponding provisions will be as per the old act only. Too confusing? Clear, right? Sorry, successful in confusion. So again, I think I'm more on Income Tax Act 1961. I'll try to simplify my language. So if there is a capital gain violation, I'm just taking an example. If there is a capital gain exemption which I've enjoyed in 1961, I violate the condition of those exemptions, which I should have actually followed in this tax year, then obviously what will happen in the 1961 Act, if this Act was not introduced at all, it will become my income in this year. So here also nothing is changed. It will become my income in this year. But just because this year is governed by 2025 Act, it will become income of this year in the corresponding section. The section number change is the only matter here. I think I've simplified enough. Did I? Clear, right? Okay. Sorry, sir? Loud and clear. Thank you so much. So recovery of old tax dues. So recovery of old tax dues can relate to any of the search related recovery provisions where they've like attached any property, bank account, etc., or pertaining to collection of any demand due. Maybe like your 1011 credits were not given thanks to the transition of the ITD to ITBA in 1011 to, despite the fact there was a blanket exemption which was given by the finance minister that any demands less than 10,000 will get waived off. We still have issues prior to 2010 which are not getting resolved till date. Yes, right? We can ask sir to close his ears for a moment and all of us can say yes here. So we are all facing those kind of challenges. And this, they have not given any special benefit here again. Just the same act continues. So all the recovery proceedings can continue in the new act as if the old act existed. So if they have to attach your property, they can. Suppose like if they have attached your property in a search related proceeding, where your property attachment, the provisional attachment expires in May 2026. So then what happens? Which act will govern this? They can attach your property for 6 months, then like extend to 6 months until the completion of assessment. After the assessment is over, then the recovery proceedings will start and there's no question of any provisional assessment. Let's say like the assessment per se got over in 31st March 2026, precisely on that. And there is a provisional attachment which continues until May 2026. What happens to this provisional attachment? Sorry? Recovery. So assessment is over, sir. We'll go on appeal now, sir. We still have room there. Recovery will start only after like if there is no stay is vacated, etc. And ITAT, High Court, Supreme Court, maybe my daughter will be in practice then. I don't know. So this provisional attachment will continue to be a provisional attachment until May 2026. My assessment is over in March 26. I will certainly go on appeal. I have time until April 26. I would have gone on appeal prior to this, expiry of this provisional attachment. Therefore, this provisional attachment cannot be converted into a recovery. But if we just flip this example to make sir happy, that if I have not gone on appeal, I forgot the date, then what happens? This provisional attachment can be converted into a recovery proceeding per se. just as per the old act and the new act with the changed section numbers. So the substance does not change, the form changes in terms of the recovery. Notifications, circulars, rules, everything continues. So whatever notifications came, whatever circulars came, are these binding on the, the department? So we've had like umpty case laws to say like circular is not binding on the SSE, or like it is not part of the act cannot override a circular. Circular is for a specific period. For example, TOLA is only for the COVID window. All these interpretations and litigations we've had, they just say like the same will continue. So don't get disturbed by anything. Everything will continue, provided it is not inconsistent with the new act. But to check what is inconsistent in the new act, what is there? There is nothing. So it is consistent with the old act. What is changed in the new act is only the language, section numbers. They've very carefully ensured that no single section matches. Motta section padchada agunu. So there is no section like, it is there. Even like 16 becomes 17. So it's like there's at least a smallest of change. We cannot say like, it's just the same section. No. They very, very carefully decided to make us read. Come on, undo the entire exercise and redo. But here undo does not work again. So we cannot undo, we have to just redo. So it is like reading one more act, remembering one more set of section numbers. We cannot forget this like what we forgot VAT and central excise and customs. No, you will remember the old act and the new act. Now what will happen to the double taxation avoidance agreements, the FATCA and all other agreements which they entered into with the international organizations? It all continues. So there is no change, provided it is not inconsistent with the new act, and obviously nothing is inconsistent with the new act. Now what will happen if I have failed to file the form 67, which is a normal mistake all of us do. A lot of cases in ITAT and even in courts. So form 67 is a form which we file, 1961 Act, so which we file to avail the foreign tax credit. So to avail the foreign tax credit, we will have to file this form 67. I missed filing this form 67 for the financial year 23-24, assessment year 24-25, tax year 23-24. I missed it. I missed filing this form. I suddenly realize when there is a demand notice which is coming, disallowing the foreign tax credit for non-filing of this form 67. What should I do now? Very difficult question. Sorry, sir? Condonation. Yeah, condonation is fine, but like even to condone, you should do the primary step first. What is the first step? Why is the demand coming? We have not filed form 67. What should we do now? First file form 67. So it will still be the form 67 only. So we need not look for any new forms which has to be filed. It is pertaining to the old year. Old act is applicable. Old forms are applicable. We will file form 67. And the condonation procedure will be as per the new act or old act? Old act only. So if the condonation again cannot be given by any of the authorities here. It has to be only the ITAT or the higher forums. And if the condonation is given effect to, then the effect of giving effect order by the assessing officer will be under which act? Old act only. Refund to us will come under interest on refund. Refund will come to us under old act only. Interest on refund will be as per the new act. But what is the interest difference? Sorry, sir? Yes, sir. Absolutely. So this will be the exact scenario of the transition, and absolutely like all other agreements, notifications, like schemes, whatever they have done in the old act remains valid. expired limitation period is not revived. So this is exactly where I said there is a confusion, or probably like there's a huge change, probably like a big branding exercise of new act being introduced and all this. Now this confusion is there, this transition is there, old act is there, new act is there. Can I take benefit of this? As we did earlier for GST, etc. The answer is, can I take benefit? In case like if I missed filing an appeal within the time frame as per the old act, can this new act give me that benefit? Sir? Old act only. So what your old act cannot give you, your new act will also not give you. In case if you miss something in the old act, just like how we are not missing anything in terms of the credits, benefits, options, schemes, whatever came to us in the old act, similarly, any of this again is as per the old act only. So nothing will change. So in case if there is something which cannot be condoned, yes sir. There is a separate section sir, coming, next class is that. So this limitation period is not changed. You cannot take any benefit. If your limitation period is expired, this new act, introduction of this new act will not give you any extra benefit. It is again as per the old act only. This cannot make anything or probably like any defect in the old law valid here. Now here, while I always said like the department has been very, very fair in terms of, giving, taking, etc. in this transition, I'll just quickly take a minute to move on to the 148 notices which are giving. So this particular 148 issue reopening has undergone like two big changes in the last 5 years. In 2021, there was a change to say that there has to be a 148A to be issued. Then again, there were like lot of case laws to say that 148A was not issued, this was not taken, reason to believe was not there, etc. Again, in 2024, August 24, there was another change to say that this reason to believe cannot be just a hearsay, cannot be just a borrowed satisfaction, cannot be just a information related to a search of a third party where I received this information. Technically, like the satisfaction should be mine. The assessing officer should satisfy himself, and the satisfaction cannot be this reason to believe. Again, has that small sentence or this 3 words has created a plethora of case laws like what is this reason to believe? Should I communicate this to you? Should I not communicate this to you? Or my reason is fine, or should I get the approval from the authority, etc. Like we've had enough of litigations. Now in this scenario, while it is said, of course, like the last clause as I told is pertaining to the search. So why am I linking 148 here is, so if while there are like already pending litigations pertaining to this specific, reason to believe or the information with the assessing officer to initiate 148, that applies post August 24 or prior to 24. 21 to 24, what is the scenario? 21 to 24, the scenario is they have to give you 148A. 24, they brought in that this reason to believe cannot be any generic reason to believe. It has to be a specific reason to believe. Now, people went on to say that yes, this is a good and welcome change, and this change you have brought in only to make good the defect or probably the lacuna, or to make ease of living or ease of doing business better, right? So then if there is a pending litigation because of this reason of borrowed satisfaction, why cannot I fight on that? So there are pending litigations for this reason to believe from 21 to 24. Now this 24, post 24 again, now what will be the scenario? Is this actually like constitution? Sorry, sir? Absolutely, sir. That's what we would prefer. Sir would not prefer that. Sir will have a different view. So we will say like, yes, it is beneficial to me. You have said that there has to be a actual reason to believe. you have to communicate this reason, 148A has to be given, and I cannot issue any reopening based on my borrowed satisfaction or information pertaining to a third party, etc. I should have solid reasons for income escaping assessments. Now, post August 24, the procedure is very clear that they can issue only if they have proper evidence or documents and specific reasons. So now this 21 to 24 is already in litigation. What will happen this post 24 to now? If you ask me for an answer, even I don't have an answer. I just wanted to throw this to you so that you can, digest this and look forward to when next time you receive an 148, maybe we can fight on. There's a recent case law which has come in the Bombay High Court, which is very, very interesting read, where they've said they have written to the Attorney General of India asking about the constitutional validity of this 148 and given a stay to the SSC. So we can probably that will be an interesting read, and we can borrow facts from there to understand, and this is to take benefit of this transition there in terms of this procedural lapse and the timeline. So this is pertaining to the 148. Probably one goodness, I mean, had this new act not been introduced, are we deprived of this? No. Even if 1961 Act continues, we still enjoy all those benefits. But with this, can we just take any benefit there is what I wanted to keep before you for as a food for thought. You can go back and think through if this can be of any benefit to any of your SSCs there. So your question on at an AMT. So all this will continue with the new amendment which came in, that if you are opting for the new regime, you can enjoy the MAT credit, and this MAT credit can be carried forward for 15 years. When will this 15 years commence from? 15 years commences from that period, and you have limitations of the 25% etc., which was again brought through the amendment as per the finance bill recently introduced. And if technically they are restricting the MAT credit so that they can probably maybe withdraw this in future, I'm not sure. So all that remains the same. If you have a credit, you can still enjoy your credit. There is absolutely no change there. Next is your other 4 heads of income, which is carry forward. I have accumulated losses in business, in income from house property. What will happen to all these things? Say suppose I have my business income carry forward 8 years with this new Income Tax Act. Can we just imagine for a moment, your time is reset and starts from 2025. How nice. Nothing changes. So all this continues. So only for the unexpired portion, you enjoy this loss. Sorry, sir? Sir, you're borrowing all my points. Sir. That's a clause next. So they've introduced a specific clause next for that transition as well in terms of amalgamation, merger, transfers which are not part of capital gains, etc. There are specific clauses here. So here, if you have a valid loss, so all through we've enjoying losses in straight through process. If you have a valid loss, valid for the unexpired portion is still valid. But is there somebody who's going to check your validity unless there is a specific scrutiny, etc.? The answer is no. So, what is valid is, it should first be a loss, actual in books. You will have to file your returns within the time limit. Yes, sir. So, there is no specific conditions for checking the validity now, unlike our Tran 1 equivalent, nothing of that sort. We've been enjoying this on a straight through process. Same straight through process will continue for the unexpired portion of the loss which we have not enjoyed. So introduction, moral of the story is, introduction of this new act does not deprive us from any of those benefits. This will again come under that particular clause only. Capital losses continue. In case if you have any short-term, long-term losses from the heads, capital gains, all those continues for 4 years, 8 years, etc. Withdrawal of benefits under section 72A, 72B, where you have any restructuring, amalgamation, etc., which is all like available for a period, provided we follow those conditions in terms of the ownership, in terms of like various conditions of the scheme of arrangement, etc. What if we violate any of those conditions here? Tax. When you say tax, sir is like glowing. It will be taxed, and absolutely. So this will be taxed in new year, new tax year, according to the new act, in the new provision, which is corresponding to the old provision. Technically, under the old act, into the new form, old substance, new form. So it will be taxed. But if you actually like follow all those conditions, then there is no change at all. All the benefits which you were enjoying in terms of your amalgamation, merger, demerger, whatever, will continue provided you satisfy all those conditions. There is absolutely no change. If you violate any of those conditions, then what would have actually happened in the old act? It would have been our income as per the old act. The same thing is applied here, just that it will not be Income Tax Act 1961, it will be Income Tax Act 2025. So it is just the same substance in a new form in terms of the taxability. Earlier exempt transfers becomes taxable on violation. So in case if we have a conversion of a partnership firm into a private LLP or a private limited company, or any such transfers which does not qualify as transfer, we've been enjoying the exemption there. If we violate any of those conditions again, then it will be taxable here. Unabsorbed depreciation, scientific expenditure, etc. See, unabsorbed depreciation and all these deferred expenses which are allowed for us for the next 5 years, 10 years, etc. We've opted for, we've fulfilled all the conditions, we've filed our returns, we've availed it, everything intact, no change at all. So it all continues in the new act, substance of the old act in the new form of 2025 act. Sorry, sir? Yes, absolutely. Depreciation unlimited time. It will continue in the new act. Absolutely no change. Deferred deductions. This, of course, like. So, deferred deductions, again. Thank you, sir. Thank you, sir. Thank you, sir. So, in terms of the deferred deductions, which is available the next 5 years, 10 years, as I mentioned. So, all those things are available to you. No change, no extra forms to be filed, no extra conditions to be fulfilled. Everything is available to you just in as per the substance of the old act in the form of the new act. Provision for bad and doubtful debt. In case if we have an opening provision and if you want to make a new provision, then what happens? Provision we make, then we'll like not a deductible, but the provision per se, we will make a provision and carry forward. So that provision, nothing changes. If you have a provision already, you can, if currently you're making any provision, it can be added to the old provision. So the idea they are trying to drive is, if you had made any provision in the Income Tax Act 1961, and if you're willing to make any provision in Income Tax Act 2025, there is no difference. If you have a 1 lakh provision made in 1961, current year you wish to add some more provision to it, let's say like 30,000, this 1 lakh plus 30,000 can be added together. No separate disclosure, no bifurcation of old act, new act, no separate forms, no extra procedure, nothing. It can just seamlessly be added to the old provision and it continues. In case if you don't have any provision, you can still make the provision this year and it will be treated as a provision. That's it. So basically, moral of the story, there is no change here. Our favorite faceless assessments continues. So there is no change in the faceless assessments or the faceless appeals. They've just made this amply clear, though they are not like bringing in a specific, changes here in this new act. They just say like all the scheme which was made in the old act continues in the new act as well. This is the last, the 22nd clause in the transition phase. Search initiated under 132, requisition under 132A. If this is happening on 31st March 2026 or 1st April 2026, what is the difference? Block assessment continues, no change. Sorry, sir? That is as per old act, new act. But in terms of search per se, if it is not identifiable that this particular income escaped assessment in pertaining to any of the previous years, then it will be taxed in the year where the assessment is actually made. So what is the difference here? Look at the complication. So in case if there is a search in, or maybe like on 21st March 2026, let's assume there is a, or probably like I can put it this way, like today there is a search happening in a place and they have identified income which has precisely escaped assessments, probably escaped assessment pertaining to like say 17, 18, 2021 or like whatever years where they have identifiable income which is pertaining to that particular tax year, financial year. Now there is certain bunch of income which cannot be mapped to any of those assessment year. So any search, this typically happens. You will have like two limbs of income. One is where you can actually map it to the specific tax years or the financial year relevant to the assessment year, etc., where the assessment is made in that year and not in this year. In case if you are not able to map it, then you deem all those income as the income of this year. Now, if you want to go on appeal, your search will have like orders pertaining to 14, 15, 2021, tax year 26, 27, where the search is concluding in the tax year 27, 28. If you're going on appeal, let's say like I'm assessed in 4 years. 4 years there are income. So 14, 15, 18, 19, maybe like 23, 24, and all other residual income is taxed in tax year 26, 27. Now I will have to apply for 4 different appeals for 4 different years. And even if I like just club everything and file an appeal, for this year, I'll have to go as per the new forms, new procedures, JCIT appeal. For the old years, old assessment years, where the old act is applicable, I'll have to still go by Form 35 CIT appeals and the old procedure. So while they have actually given the tabular column for all the consolidation, for example, like TDS, though it is slightly complicated when we actually read initially, like because we are tuned to this 144 series, now like going through this 392, then again you'll have to map to that particular code. Depositing was definitely a challenge the first time, but then we will get used to this. This particular different kind of appeal proceedings or this parallel act which is going to govern the proceedings which are going to happen post the introduction of the new act, then we'll have to remember both the act. For this, we'll have to go through the old forms. For this, we have to go through the new forms, for which I think the government will listen to us, bring in some parity that even if it pertains to the old act, per se, my suggestion would be probably like all of us in this hall, when there is no big change in terms of the substance of the act, they can actually say the proceedings can happen as per the new act, except for the pending ones, at least for the ones which are going to file. Henceforth, if the order pertains to like 1920 or 2425, which is coming to us today, and if I'm going to file an appeal, I can still go under the new form so that at least we can be beneficial, or probably like we can be relieved of remembering the old sections. 263 in the old act, it refers to something else. the PCIT. And here 263 refers to the basic filing of your income tax. So that much we'll have to remember when you're writing your responses. We'll have to accordingly map two different case laws. Thanks, like this 1 or 2 years, we are not going to have any case laws. Now, again, as I told, the simplification of language, we are not sure on the nitty-gritties or the nuances which has gone into making this act. Because when, when we look at the global scenario in terms of this revamp of this Income Tax Act, I think it is Australia and US, when they did the revamp, they actually ended up, making it more elaborate. India is the only country where we are proudly boasting of like making it very concise, because we believe that the older acts 1922 and 1961 was very elaborate, and every single case law, every single litigation has actually brought in an amendment, explanations, provisos, etc. Now we have actually grouped everything into the act, and we are still proudly boasting of it. But to actually test the language, the interpretations, we have to really wait and watch how the practice is going to be. These languages changes, the simplification or the so-called summarizing of these sections, making it into tabular columns, etc., might give or like start rooms for various litigations, precisely like the Bombay High Court one, which I was mentioning in terms of the 148. So before even this starts, actually like that has actually come. I can tell you, I just forgot. It's just, I can tell you. So you can refer to this constitutional validity itself, like it comes in the Google. So there will definitely be a lot of case laws which are going to come in. So then we will have to refer to the case laws which are pertaining to the new act for the new appeals, new litigations, and for the old act, old case laws, old applicable ones, which is going to make our life miserable. So looking at this, then imagine a scenario where like for the same issue, for the same search, if I'm writing 2 different appeals, 2 different responses, then I have to have 2 maps. I'll have to say like this sections, this case laws, this is what the language which is used. Even the section 68, if we can look at the search, just the 68 series of the undisclosed income, credits, investments, etc. Now the new act in terms of simplification has completely brought in a new language. So if we actually get into a case where we apply our mind pertaining to that case, where there is a different interpretation in terms of any of this language, then for the same issue, then we will have to write 2 different responses. We will have to reference 2 different sections. Then the department might take a view using the clause of the General Clauses Act to say that, what we meant is the same as per the old act only. Intent of the law was only the old act. So if we are going to take any interpretation basis the words, the coining of the words in the new act, then it is going to be a challenge here. So again, moral of the story, we will have to actually remember both the acts together. When we are writing responses, we have to write 2 different responses. Anything pertaining to the period prior to 1st April 2026, we'll have to go by the old act. And for those items post 1st April 2026, if it pertains to prior years, it will still be 1961. And whatever proceedings, of course, obviously post 1st April 2026, pertaining to the tax year 26-27, we will go by the new act. So we will technically be remembering and practicing 2 different acts for this. Found the case law? What is that? Oh, okay, sorry. She was searching. So that's exactly where they've sent up. Penalties pertaining to the old law will be as per the old law only. But of course, these are the points which are open for litigations, where we can say like when there is a new act which is brought in, when there is reduced penalties, then why can't I take benefit? This reduced rates of penalties would have definitely become a litigation irrespective of the fact that the new act came in or otherwise. When there are reduced penalties, then obviously we will say like, no, the penalty is initiated now, and when there is a benefit which is available, and many a case where there is like estimation or like for settling the case, etc. All those things, there is obvious opening for litigation in terms of the reduced rates. Technically, wherever there is a difference, then the Act always says whatever is beneficial to the assessee should be followed. So that has been the way that case laws has been framed. But we can actually like wait and watch. So the points to consider: references to the year, tax year, which I actually covered. So the notices which are yet to come will always refer to the tax year and not to the financial year and the assessment year. So we should start practicing our mind to read. It's always financial year only. So for us, it's like we are trained to read assessment year and we'll always look at assessment year -1. Now it is just going to be the previous year. Tax year is equal to the previous year. Compliance under 1961. So if, as I mentioned in the previous slide, if there is any non-compliance in 1961, this 2025 cannot make good any non-compliance there. So compliance under 1961, if you have complied, if you have actually like complied with all the conditions, if you're eligible to enjoy any of the benefits under 1961, you can continue to enjoy those benefits in 2025. But for that, any gap, lapses, violation of conditions in 1961 cannot be made good by virtue of this introduction of 2025. There is a parallel run in terms of TDS, litigation and return filing. Litigation we've discussed enough. TDS per se, that's like when this transition actually came in, all of us had a doubt on which section should we use. Of course, like now all of us would have completed that transition. So when we were to deposit our TDS on 30th April, which should we actually follow in terms of the TDS? New remittance on 30th April pertaining to 31st March 2026, old. So the TDS, the language of the TDS is credit or payment, whichever is earlier. So if it's a continuous contract, let's imagine. So, and if you have the payment made as an advance earlier, then we are supposed to deduct TDS there. If we have made an entry as a provision, still like if the provision is very precise and you know that you're going to make a payment, then again TDS is deductible. That's a stand which the government is taking. So then the TDS is deductible under old law and remitted under old law. Let's imagine a scenario where I missed deducting the TDS at all. And of course, like I have time till my return filing date where I can pay my TDS along with interest, penalties, etc. Revise my TDS returns. Then which act should I follow? Sorry, sir? Sorry, sir, I didn't understand. Disallowance. Absolutely, sir. Okay. Sir is saying instead of like taking the hassle of collecting and remitting the TDS and whether examining old law, new law, better get it disallowed and go. It's the easiest option. But client should agree for that. So the answer is it is only the old law. So anything pertaining to the financial year 31/3/26, where the TDS ought to have been deducted in that particular financial year, where we have missed deducting and we are going to like remit it later. We just discovered during the audit, etc., which typically happens, practically happens in all scenarios, small to big, everywhere. Then we'll be still doing it in the old law only. Interest, penalties, everything will be governed by the old law only. What happens to the advance tax? Absolutely. So for the advance tax of this year, we have to look at the new provisions of the 2025 Act, because this pertaining to the tax year. Financial year of 26-27 will be governed by the new Act, Income Tax Act 2025 only. So this is just to look at the time limits for reassessment notices. So when we look at this 3 years to 4 years, etc., nothing to get excited. Nothing has changed. Because the assessment year and tax year is changed, there is a +1, -1 there. So nothing has changed, the time limits, etc. Only thing is we have to get equipped to do a parallel running of the previous Act and the new Act. Remember, two different acts, two different sections, two different set of case laws. Thanks, like new, it will still take another couple of years for the case laws to come in and settle down. Until then, like we'll have to still do a parallel run. So this is like where there is any reference made in this act to any tax year commencing on 1st April 2025 or to any earlier tax year, the same shall be construed as reference to the corresponding previous year under the repealed Income Tax Act. So this we discussed in length. So hereafter, if it is going to be tax year will be equal to previous year, which is equal to a financial year. So no more assessment year. This is the only thing which we can forget. Rest everything remains. So this is the saving section, income from other sources of this transition, where without prejudice to the provisions of subsection 2, the provisions of section 6 of the General Clauses Act 1861, 10 of 1897 shall apply with regard to the effect of repeal. Which means they have actually like exhaustively included 22 clauses pertaining to this transition, just to tell us there is no extra efforts required from your end. So we will take care of the transition with the help of our information technology to make the income tax seamless. No extra procedure required from your end. Just in case, if we have missed any of those clauses to be like specific, where you are finding anything challenging, that you have like missed any benefit or like in terms of collection to the department, both sides open, then I will refer to this. This is exactly where I said, if we have any litigations which are opening up by virtue of change in language, simplification of language. So here the government has not, in any circular documentation, nowhere it has said that it has not changed the substance of the act. It has just introduced the new act. It is left open for us professional stakeholders to read and understand. Despite the fact that, you know, they have given the comparative reading in the income tax portal website, the Karsati, the Karsetu, all these facilitations, the brochures which are given by the department. So they are doing a huge exercise in terms of bringing this and facilitating this to ensure there is a smooth transition from the old act to new act, just to ensure that there is nothing scary about the new act. But they have not explicitly said in any through any communication which is statutorily valid, that they have not made any substance related changes. So that is one benefit maybe like we can draw, and this is one defense maybe they will take. So we can say like my reading of section 68 was different. Yes, now you have introduced section 102. My reading of this 102 in context of my client's this particular issue, I see there is a gap. I can still go ahead and file a litigation. But in case if there are like lot of litigations which are coming up in terms of test of language, simplification of language, which warrants more explanation. Now already like in the non-profit organization assessments, they have already like started including alphabets. So this completely eradication of alphabets, subclauses, etc. is practically not possible at all, because there will definitely be doubts. Earlier, like, when we were attending income tax clauses, etc., when they say for the removal of doubts, then I've heard faculties telling that we don't even know who had this doubt. Oh, while reading the provision and the explanation itself, it will be pretty clear. Then again, they will say like for the removal of doubts. Now, we'll definitely have doubts when there are like litigations which are coming up. For example, like the 37(1) which was introduced. That was through a ITAT decision where they said like any illegal payments, though pertaining to the business, relevant for the business, etc., it cannot be allowed. Violation of any other law cannot be allowed. That was brought in as a proviso. Now we don't know like what kind of interpretations will come in terms of this new Income Tax Act, and as the litigation starts coming in, then they may take benefit of this repeal and savings clause to say that we have clearly said that whatever benefits was like there in the previous act will not go away. And will not go away is not only for you, is for me also as a department. So this is one place where I thought like which is beneficial for us to take the benefit of the language changes, but this is the difference which will come from the department. So this is what the General Clauses Act says. Legal rights and obligations that existed before the repeal remain valid. Cases and legal actions initiated under the repeal law continue unaffected. Sanctions imposed under repeal law remain unenforceable. So which is like again a reinforcement of whatever we have discussed till now. Out of the 22 clauses, I just repeat for just to make it a summary. Out of the 22 clauses, the first 4 or 5 is more on the legal sanctity or the benefit to ensure that the legal validity of whatever has happened in the previous act will continue in the new act. The second limb is more in terms of the carry forward losses, credits, etc. Whatever we were enjoying in the old act will continue in the new act. Limb 3 will be more on the schemes which we actually availed, be it the deferred expenses in terms of the section 35 or transfers which were not treated as transfer, and accounting those as income in the new tax era, how those things will be treated. Again, there will be no change provided we fulfill all these conditions. And the clause V talks about the search. So this 22 are the actual explicit changes in terms of the transition from the old act to the new act, provided again like the repeals and savings. So I'm open to take questions. I'm sure it has been a long day for you. If there's any questions, I can take.
Whether they have to learn both old act and new act.
Present students, if there is a case law to my mind which involves tax years pertaining to prior to 1st April 26 and this, then of course they will have to read both the laws, is what I think. But again, yeah, I haven't thought from that angle. It's just going to be more complicated for them. For at least us, we have the luxury of having the books and, taxman and other things in hand. For them, they have to like give it from the mind. It's definitely going to be difficult for them. Syllabus clarification, yeah, maybe. But like again, if there is a specific question pertaining to the block assessments, etc., pertaining to the previous year, they will have to refer to the old sections, because then it is like, so whether they know the provision, the substance, etc., they should know where they have to refer to in the old act, because all the assessments, suppose they are coming into practice after qualifying, then they should definitely know both the acts, and institute will definitely try to test both, is what I think. If there's any other questions, I'll be more than happy to take. Not just pertaining to this, maybe other areas also, like in income tax, maybe it can be a mutual learning experience for both of us. I think you're all too tired and done for the day. So thank you so much for the patient listening. I once again thank SIRC for this wonderful opportunity of giving me this opportunity to address the gathering. Thank you so much.
Thank you, ma'am, for this insightful session. The way you explained the practical aspects and the transition challenges with such clarity made the session truly valuable. Your simple style, rich experience and practical insight kept everyone attentive throughout. On behalf of the organizer and the participant, we extend our heartfelt gratitude for your time, wisdom today. Thank you, ma'am. I also thank all the participants for your active involvement. This seminar has been a significant step in understanding the new Income Tax Act. We look forward to meeting you again in the future session for this series. Thank you and have a wonderful evening. Thank you.